with that one simple step.
Don't miss Bloomberg's interview.
So what are you waiting for? Grab your phone, hit record, and let your idea
studios
fly.
in New York and San Francisco.
The future of your startup could be just one video away.
Analysis about the companies
Remember,
you know and the startups
be clear,
to watch.
be
Plus
passionate,
the interviews
and
you
most
don't want to
important,
miss.
be you.
Watch Caroline
We can't wait to
Hyde
see what
and
you've got.
Lowe on
Let's get
Bloomberg
funded now.
Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
'25 is a really critical year. We're walking that tightrope across to the soft landing other side.
If the Fed keeps stimulating here, and again, with the economy doing quite well, some of that liquidity is going to pour into the equity markets.
They want to make sure to stick that soft landing, and they don't want to overdo it.
You told me that inflation's going to get stuck, and is in the process of getting stuck in the 2.5% to 3.5% range. I think that's more than likely.
Maintain economic growth. I can't stress how important that is.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500. Near session highs up by 0.2% on the S&P. On the Nasdaq, likewise, pushing higher. On the Nasdaq 100 right now, we're positive by 0.27. Do you want some drama? Get to foreign exchange and check out what the dollar is doing to the Mexican peso and to the Canadian dollar. Vicious rally for the US dollar over the last 2 months, and we add some weight to that rally this morning off the back of some tariff threats from President-elect Donald Trump.
Yeah, an additional 10% on goods from China, 25%. This arguably is the more interesting one to me on Mexico and Canada, which is the reason why you're showing the Canadian dollar and the Mexican peso. This idea of, okay, what are the goals? He cited the fentanyl crisis, saying that a lot of the drugs were coming in from China through Mexico, and also talking about immigration. The timing of this important. Why now? It has been, what, 3 weeks since he was elected? He has a lot of time before he gets in the White House. We've got a lot more headlines to work through.
But he's wielding all this raw political power out of Mar-a-Lago, not out of the West Wing. Two things really in focus. One, it's about illegal immigration. It's about narcotics. Two, the remedy is going to be tariffs. And I agree with you. Canada and Mexico is more interesting. Why? Because there is a trade deal in place that he renegotiated in Trump 1.0, USMCA, and also the response. So when it comes to China, you had a number of Chinese official spokespeople come out. When it comes to Canada, you had their leader actually make a call last night because they were so concerned about this 25% tariff.
The winter White House is up and running at Mar-a-Lago, that's for sure. Coming up this hour, we'll catch up with Stuart Kaiser of Citi as Trump's tariff threats agitate global markets. We'll speak to Congressman French Hill on the fallout in Washington, D.C., and we'll catch up with Matt Lazzetti of Deutsche Bank on why he thinks they're going to pause at the Federal Reserve for the whole of 2025. That conversation is just around the corner. We begin this hour with the equity market rally losing some steam as President-elect Donald Trump's tariff escalation fuels dollar strength. Stuart Kaiser of Citi writing the following. The focus of markets has been Trump policy and geopolitical events that have shifted risk-specific pricing but not reached critical mass to drive broad-based de-risking. Stuart joins us now for more. Stuart, good morning.
Good morning.
You see evidence of that again this morning?
Well, I mean, this is, we'll see how futures react, to the tariff announcements. The market's kind of been on top of this. If you look where volatility markets have been pricing risk premiums, it's been in precious metals, it's been in, China-exposed equities, and it's been in the currencies. So I think the market has kind of viewed those as key sort of pockets of risk. And, they're going to be surprised, I think, by the magnitude of tariffs proposed on what were former NAFTA, kind of trade members. So without a doubt, we'll see how the futures react. But, this is what we're in for, I think, for the next couple of months.
How credible do you think the threat is? Additional 10% on China, 25% on Mexico and Canada. How credible is that?
I mean, you have to read it as credible. I mean, this is the President of the United States. He increased tariffs in his first term, and this was, part of his campaign. So I think you have to view them as credible. I think some of his inner circle has talked about these being negotiating tactics, and I think that's potentially true. But I mean, a negotiating tactic is only effective if you're willing to use it. So I think you have to view them as credible threats. Yeah.
Which is the reason why headline risk is real, and the reason why you're seeing people trade on this, even if that trade gets faded in a couple of hours because of another headline that comes out. Is this a good time or a bad time to be a trader?
It's a hard time to be a trader, I would say. Look, I think it's a good time in the sense that, good traders like a little bit of market volatility. I think the hard part about these type of things is just the unpredictability of it. It's not, payrolls are going to be released at 8:30 a.m. on December 6th, and I can kind of position and trade around that. This is a little more, kind of random in terms of timing, and also, coming at you from a lot of directions, right? You have traders that are trying to deal with potential impact on healthcare policy, potential impact on food policy, potential impact on tariffs, et cetera, et cetera. I mean, nobody can say this is totally surprising. Again, these were all things that were discussed during the election as priorities to deal with. But no, it's a difficult time, I think, to be a trader unless you get it right.
To build on that, you're talking about how there are specific headlines that have affected healthcare and appointments that have affected the healthcare sector in particular. And you had a great note talking about how different sectors have traded differently from the overall headline in tandem with people's belief. Do you think that one of those moves is stickier than the other? In terms of, say, healthcare, given the fact that some of the potential nominees for cabinet positions have talked about really disrupting healthcare in America?
Yeah, I think, to us going into the election, two of the sectors that were a little bit like wild cardy would have been healthcare and energy, just in the sense that it's hard to decide what's going to go on at like the GICS level 1 sector level. You almost have to go down a level, and even within healthcare, that's the case. Do you have pharma being impacted in one direction, but then you have biotech potentially benefiting from M&A, and then people are trying to hide out in med tech, for instance. So it's a very complicated sector in terms of the policies that are being proposed impact different levels of it as you go around. Energy, I would say, same way. We're going to drill a lot. That might be good for, let's say, pipelines, but it might push the price of oil lower. So I think those two sectors in particular are very complex right now, going to be very, very difficult to trade. In terms of persistent, I think the markets are telling you they think banking is persistent. So I think that is the one that people are comfortable being long, even in a down week. Those the banks are rallying, but I think healthcare and energy are the two that are going to be a little bit more pulled in multiple directions at the same time.
When it comes to healthcare, though, changing policy in Washington, D.C. is like moving a massive tank. It takes a really long time. Would now potentially be a good entry point, given how they have fallen with some of these announcements?
It's possible. I think, our view on healthcare has been that it was going to be difficult to trade going to the election. We do think it's a beneficiary of M&A. I think at the top line, the question is, relative to the credibility question, is, how much of this stuff is sort of more pie in the sky, or maybe RFK Jr. personality things he'd like to get done versus what are they actually going to kind of push through. I think there is potentially there's going to be a time to fade this stuff. I think right now, when things are just kind of uncertain and more of I don't know, wish list, that actual policy might not be the time. I think, our view on the election, it's 3 stages. It's the initial risk-on reaction to the election. Then you have what we're in now, which is nominees and policy proposals. Then you have phase 3, which is probably next year, which is actually policy implementation. And I think as we get closer to that is when you can think about kind of fading some of these things.
Well, in this phase 2, this transition, why are U.S. markets taking it in stride and European markets are down across the board?
That's a great question. U.S. markets I think are still benefiting from like the risk-on repositioning part. I think a lot of the policies we've discussed, particularly on the tariff side, are viewed as more pro-U.S. and kind of hurt Europe, to some extent. And then you have the geopolitical risk, coming out of both the Middle East and Russia, Ukraine. So look, I mean, if there's one thing that a Trump administration is probably focused on is domestic growth, right? America first type situation. So if you believe he is going to be successful at that, then almost by definition, U.S. markets should benefit a bit more. Will that actually come out, in the wash? We'll have to see, but I think that's part of it right now.
What's your read on domestic growth? 2 retailers just reporting moments ago. One is Kohl's, the other is Best Buy, both trimming their outlook, downgrading their outlook. What's your read on things right now? Target, I understand, hit a landmine. Big inventory problem. I've got that. You can sit here and say that's a Target problem. What have you seen across the other retailers? What are we learning about consumption and how good U.S. growth actually is?
I mean, it looks fairly solid. Our retail folks, did a big survey pre-holiday spending. It looks like holiday season is going to look pretty solid. So that's a good story on that side. I think it was Williams-Sonoma actually put up pretty decent numbers on their earnings. So it looks like, I think how it's been, which is the underlying growth momentum seems pretty positive, but you're sort of at that level where you get some good news and bad news. And I think because of that, the bad news stuff is getting punished pretty bad. So I think over the summer we were trading decelerating growth. I think you still have to be trading this as you are at a solid growth level, but you're close enough to borderlines that when you get bad news, you get a ton of reaction. The payrolls is going to be massive on December 6th. My read would be growth is solid, but not exemplary, and we just kind of have to trade it that way. And in those environments, you have a lot of kind of risk, reward, and volatility because you're close to trigger points in a lot of spots.
You talk about how they're winners and losers. The winners being the Walmarts of the world, the winners being some of the big tech names. I want to read some of the commentary from the Kohl's CEO. I thought this was interesting. We are approaching our financial outlook for the year more conservatively, given the third quarter underperformance and our expectation for a highly competitive holiday season. Is this a new time where the big are going to get bigger, that anyone who has that platform to basically dominate when it comes to data, when it comes to some of the technological advancements and deliveries, are going to outperform at a time where they can offer maybe better price competition than some of the other companies that haven't had the scope to really expand in that way?
Yeah, I mean, I think that's true, and I think that also brings the tariff discussion in too. Is are these bigger companies better set up to deal with any potential tariffs than kind of smaller competitors? So yeah, I think the big winning, that's hard to say. You still have to get it right. I mean, Target's a big company, and they clearly got something wrong. Just based on the stock price reaction. So yeah, I think it gives maybe a Walmart or an Amazon a little bit of an advantage, but there's still execution risk, right? And you still need to do it and do it well. I mean, I'm not under the impression that this is a more competitive holiday season than last holiday season, for instance. I mean, I feel like these things are always pretty competitive. But yeah, there's an advantage there.
I guess that the bigger question is, how much of a macro tell are any of these stories, given the fact that there are winners, but there's some pretty big losers who are pointing to competition, who are pointing to a real unwillingness for consumers to buy things if the prices are perceived as too high or if the quality isn't perceived as enough?
Yeah, I think the macro read's been really tricky, I think, because you had a period last quarter when the dollar stores did really, really poorly. And that would seem to have reflected, hey, you're having a lot of pressure on that lower end consumer. But in that same period, Walmart did great. And there was some discussion, well, that's just because people are trading down to Walmart, and that is actually all bad news. I have my lower end consumer under pressure, I have my medium and high income consumer having to trade down, and I need to be worried about that. But then you get your retail sales numbers, and they're okay. And I think this gets back to John's question, which is, economic growth is fine, but it is slowing down to a level where you're going to get some good results, you're going to get some bad results, and that's going to kind of create volatility in the market, and you just kind of need to risk manage around that a little bit.
Is there more, though, anecdotes that more and more consumers are trading down, and potentially that's the start of something bigger?
It does feel that way, but I mean, I can think back to the previous August 2023, when you had some weak data out of some of the retailers on their private label credit cards, and folks were saying this is the moment. These private label credit cards are under pressure, and credit balances are rising. So I mean, the anecdotes, yes, they are stacking up, but I feel like people have been trying to fade this for an extended period of time, and it's always been a little bit too early. So. I think, yes, the anecdotes are stacking up, but I'm not sure that that's, out of the blue. I think this is something people have been expecting, and it's been kind of an ongoing process, and we're just going to have to, I hate to say it, just wait on the data at this point.
Jobless claims has been a great example of the same thing. So many head fakes over the last couple of summers. We're going into September, October, every single time we're waiting for this thing to slow down, and then it just doesn't happen. Stu, it's good to see you.
Thank you.
Have a happy Thanksgiving.
You too.
Thanks for catching up with us. Thank you. Stuart Kaiser there of Citi. Equity futures right now on the S&P positive by 0.25%. Let's get you an update on stories elsewhere. Here is your Bloomberg brief. Justice Department Special Counsel Jack Smith asking the judge overseeing Donald Trump's election interference cease file a motion to dismiss the case. The decision coming due to a long-standing DOJ policy barring the prosecution of a sitting president. Intel securing $7.9 billion in federal grants from the Biden administration. The deal marking the largest direct subsidy from a program to boost U.S. chip production. People familiar with the matter telling Bloomberg Intel will get money for projects in Arizona, Oregon, and New Mexico. Intel is up by 1%. And finally, Formula One set to expand its grid in 2026 to include a new American team partnered with General Motors. F1's 11th team will be called Cadillac F1 and will be run by Andretti Global. It's that time of the program where I speak to myself about Formula One racing and whether we're going to enjoy the extra team being on the grid or not.
I'm excited for this. Actually, to be completely honest, because of Netflix, F1 is gaining popularity, even among the younger cohort in my family. So I just want to point that out.
So good luck to them.
Go ahead.
Personally not happy about it. I think the grid's already full.
I was waiting
And it's
for
a
that.
problem when the new teams come because they're never any good.
Yeah, well,
And it takes a while for them to get better.
you just don't like American grids. They're not windy and in beautiful hills. They're not in sort of
racetracks.
the...
No, that's different.
That's
when I'm in the grid, I'm in like the... Okay, that's different.
You're
I'm
like,
next on a
you know
program.
nothing.
Never mind. Donald Trump's tariff threat.
If I was Donald Trump, I'd be looping in Congress right now. What we found is that Canada and Mexico are very good at coming up with retaliation strategies.
Sports. Speak to yourself. That's the rule from now on. From New York, this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Two stocks to watch in the last 5 minutes or so. One is Best Buy, and the other name is Kohl's. Those two companies, those two retailers reporting earnings just moments ago and trimming their outlooks. Best Buy getting hammered down 7%. Kohl's getting demolished. We're down by 13% in pre-market trading. Two names to watch. Two currency pairs to watch. I think you know them well so far this morning. One is dollar MEX, and the other is the US dollar against the Canadian currency, the loonie. We're seeing some significant weakness on either side of the trade, though pairing some of that move. Dollar strength certainly the story this morning off the back of the tariffs proposed overnight. Under surveillance this morning, Donald Trump's tariff threat.
If I was Donald Trump, I'd be looping in Congress right now. What we found is that Canada and Mexico are very good at coming up with retaliation strategies. So if I have Congress on board, it makes it harder for them to target specific congressional areas. And then second is personnel is policy. Without Robert Lighthizer, you really don't have that key personnel to be able to move these tariffs pretty quickly.
So here's the latest this morning. President-elect Donald Trump vowing to impose a 25% tariff on products from Mexico and Canada and an additional 10% tariff on goods from China, calling it necessary to clamp down on the flow of migrants and illegal drugs crossing America's borders. Let's loop in Congress right now. We can speak to the Republican Congressman French Hill of Arkansas. Congressman Hill, welcome back to the show, sir. It's always wonderful to hear your perspective on things. We want your reaction to this. How credible is this threat from President-elect Donald Trump overnight?
Well, Jonathan, good morning. Happy Thanksgiving week to you and everybody at Bloomberg. This is a critical threat by President Trump because we have unprecedented border problems with particularly Mexico on fentanyl and nearly 9 million people that have crossed the border. We've not been able to secure the border under the Biden-Harris administration. This was a major campaign point. for President Trump. And so I believe that he's stepping up and making this statement about tariffs to tell both Canada and Mexico, we have got to get our border security in the United States squared away. And then secondarily, I think he's very concerned about imports from other countries that are going to try to take advantage of the USMCA and bring in products through manufacturing in Mexico that may skirt some of the requirements of USMCA. So both those things, I think, are on the table. Border security and trying to strengthen the parameters of USMCA for some exports from outside manufacturing companies.
Congressman, so President-elect Trump sees immigration, illegal immigration, as the problem and tariffs as the remedy, but you just mentioned USMCA. If we have an executive order with these tariffs, that overrides USMCA. Should President-elect be getting Congress on board, members like yourself?
It's important to bring Congress into the discussion with the president as soon as possible. But remember, when he was president, he worked very hard with Canada and Mexico to renegotiate the North American Free Trade Agreement and create the USMCA. During that time, he also had strong cooperation from Mexico on his Remain in Mexico policy, which was to say, look, if you're seeking asylum in the United States, our law says you had to do that from a third country. President Biden has just waived that rule and allowed millions of people to come into the U.S. while they seek asylum. Probably 90% will be required to be deported because they're not eligible to seek asylum. So I believe President Trump's also using this tariff threat to tell the new government in Mexico City, let's get serious about the migrant flows across Mexico's border and get back to our Remain in Mexico policy or remain in a third country policy.
So is it just that, a threat, or do you think come January he's going to follow through with 10% on tariffs on China on top of others, he says, and 25% when it comes to imports from Mexico and Canada?
Well, we know from his first term in office that he's willing to deliver on his threats on tariffs to bring other countries to the negotiating table, both on economic and trade issues, as well as other matters. And I certainly consider border security a top issue coming out of this election. People are sick and tired of the crime impact, the fentanyl impact, the death in our communities, and the overwhelming loss of control from Tijuana to Brownsville of the Mexican-American border. So I believe that, yes, he would deliver on this, but he's also using it as a lever to get serious conversations in Ottawa and Mexico City with Washington as we turn the page and have a new presidential administration.
Well, when Congress turns the page, we're going to be looking forward to hearing who is going to get the top committee posts, the chairmanships of these committees. And in about 2 weeks' time, we might know that. I know, Congressman, you're up for potentially leading the Finance Committee. What's the status of that?
Well, I'm making the case to my colleagues, Republican colleagues that serve on the House Steering Committee, that I believe that because of my longstanding bicameral communication and collaboration capabilities with the Senate, my leadership in the House over the last decade, and probably most importantly, the fact that I was in the private sector for decades and was regulated mightily by the federal government through both the securities regulators and the banking regulators, that private sector experience, my experience on Capitol Hill and communication and collaboration, and also my work in the executive branch at the Treasury and the White House makes me an ideal candidate to serve as the House Financial Services Committee. And Anne Marie, what's amazing about this is, based on my research, were the steering committee to select me for this important post, I would be the first person with a banking and finance background before I entered Congress to serve as chairman since the Teddy Roosevelt administration. So it's a long time ago. So I hope that my background, my resume will carry the day for leading the committee.
Congressman, based on what we've heard from Donald Trump and some of his priorities when it comes to the financial sector, a lot of people are pointing to the potential for crypto being the first on the agenda of any financial chairman, Financial House Services Committee chairman. Is that your take on it as well?
Well, I think that's very important. If we don't get our policies for digital assets market structure completed during the lame duck, I think it will be a top issue for the House Financial Services Committee, and looking forward, working with a new banking committee chairman, Tim Scott of South Carolina. We need a market structure bill that gives us the framework for digital assets so that innovation, coding, company formation can take place here in the United States and not push that innovation offshore to other markets. And secondly, we do need a dollar-backed stable coin as a tokenized payment of the US dollar for use on a blockchain. Both these innovations will help support the future of Web3 and continue to make the dollar the strongest currency in the world, and America the leading technology and innovation capital of the world.
Is your background in finance an attribute, or potentially not really even weighing in on this race at a time where a lot of people are pointing to simply past allegiance to Donald Trump?
I think the chairmanship is an important issue, and background and talent, communication, collaboration are all top issues. I've worked extensively with the Trump administration previously in the previous term in office. Jay Clayton at the SEC, the bank supervisors were a major source of collaboration for me in reforming our regulatory system for both capital markets and the banking system. And I believe that'll be the case in the second term of Donald Trump. Well, I will work very closely with what I will presume to be excellent nominees from the FDIC to the CFPB to the SEC. And we will, in fact, make community banking great again through that regulatory and legislative cooperation.
Congressman, I'm not in the endorsement business. I don't intend to start, but it would be nice. I think I could say this on behalf of our audience. It would be nice to have someone with financial services experience run the House Financial Services Committee, and we appreciate your time this morning, sir. Thank you. Congressman French Hill there of Arkansas. I think we can all agree on that, right?
I was waiting for him to get to his slogan, make community banks great again, because unlike most people that work on Wall Street and some of these big banks, he actually comes from a community bank and understands the issues.
It's true. Coming up on the program, we'll catch up with Matt Lazzetti of Deutsche Bank on why he thinks it's a close call in December, rate cut or pause, and why he thinks in 2025 it's nothing but pause. From New York, this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equity futures right now on the S&P 500 positive by 0.2%, up by close to a third on the Nasdaq 100. Things are pretty quiet. They're okay in the equity market this morning, coming off the back of a 6-day winning streak on the S&P 500 with 2 hours until the cash open. Let's get you some morning movers. We can do that with Manus Cranny. Good morning, Manus.
Jonathan, good morning. I'll tell you what's not grand. The department store land down 17.5%. You just touched on this. You broke the news. But what you're looking at is a stock that was down 36% before we went in today. The language that's being used in the guidance is conservative. Also, they're changing the CEO. Kingsbury will step down. He will leave. The guidance in terms of full-year sales down 6 to 7%. That originally was 3 at 5. So you are looking at a compression in terms of what you're spending in Coles on apparel and footwear. I don't need to lecture you on the bifurcation of the consumer, but we're going into this Black Friday with some banging bargains. Now, to understand the threat of tariffs, you then need to extrapolate where is the flow of autos coming from. 25% possibly on Mexico and Canada. Mexico delivered 16% of the vehicles sold in the United States of America in 2024. 2.5 million cars, trucks, and SUVs. Canada delivered 7%. So this is just an example. This is GM down over 4%. The bigger question you need to ask yourself this morning is, are we heading towards a rewrite of the 2020 rewrite of NAFTA, which was the USMCA? Autos definitely in the sightline. And then when it comes to a parting gift from President Biden to those on Medicare and Medicaid, it is about get your GLPs, your weight loss drugs, and you can have them. 7.4 million people potentially can access GLP-1s, spending $35 billion over 9 years. That's the proposition. What is the rollback risk? The rollback risk is RFK Jr., excuse me, gets into power and changes some of this proposition. Yes, a proponent of healthy diets, but perhaps not a proponent of healthy diets and your GLP-1s. Jonathan.
Manus Cranny, some names to watch this morning. We'll touch base with Manus again in about 60 minutes from now. Under surveillance this morning, our top story worldwide here at Bloomberg. President-elect Donald Trump vowing additional tariffs of 10% on all goods from China, 25% on all products from Mexico and Canada. Trump posting on Truth Social the new levies are necessary to clamp down on illegal drugs and migrants flowing across the border.
Yeah, to me, it's really interesting to see the reaction in markets. And I think you pointed out really well that stocks and bonds aren't really responding, except for a couple of select names, and otherwise it really is in the currency market. That said, it really highlights to me how this market is going to be responding in real time and how Trump will respond to markets responding to his tariffs. I know if your head is spinning, so is everybody else's. George Saravelos over at Deutsche Bank saying the previous playbook was the less that markets reacted, the harder he went when it came to negotiations and the greater escalation there was. Is that going to be playbook in February, not right now, because this is still just 3 weeks after the election?
Right. This is the remedy. Potentially he's getting some of the negotiating done, and we saw that with Justin Trudeau making a phone call before he is inaugurated in January. But a Trump official from the first iteration has messaged me and said, maybe you guys are reading too much into it. This is just about illegal immigration and drugs. And if you look at some of the polling that was done post the election, top 2 issues people voted on was inflation in the economy and immigration. And more people voted for immigration in 2024 than they did when they voted for Trump, say, in 2016 and in 2020.
That's the big issue. It's the southern border. and the northern border to some extent, but ultimately it's the southern border. It's narcotics coming from China into Mexico and the flood of illegal immigration that we've seen in this country over the last several years.
If you're the CEO of a company that depends on a supply chain from Mexico to Canada, let's say it is a messaging tool. What do you do with that? I mean, I wonder, it's one thing for markets to respond, but as a business executive, how do you plan around that? Do you take it seriously and literally? Do you try to cater to them? And I think what BYD, the sort of fate of their plant in Mexico is a good tell, that Mexico doesn't want to anger and get ahead of angering Trump. So they're saying, wait a second, maybe we don't want a Chinese car manufacturer creating a factory in Mexico when they're accusing us of being a backdoor for Chinese goods.
Jonathan, you mentioned the southern border. New York Times has a stat this morning about the northern border. Although illegal border crossings from Mexico plummeted over the summer, the number of people arriving from Canada illegally hit an all-time high. So they're going a different route. Because why? We have seen ratcheting up of the southern border, so now they're trying via Canada.
That's the latest on that front, the trade front and security on the northern and southern border. Elsewhere, Israeli officials saying the Security Cabinet is expected to discuss a proposed ceasefire agreement with Hezbollah later on today. Sources telling us here at Bloomberg that its passage is considered likely and could be announced almost immediately.
So we're going to see that cabinet sit down in about 3 hours' time. Everyone is saying this looks like this is going to be a green light, but I will say Admiral Kirby yesterday said nothing is done until it's done, and it's not done right now. Why? Because we have been here before with false starts when it comes to these negotiations in the Middle East. What's interesting, I think, based off what Stephen Cook was saying, who gets the credit for this? Is it Amos Hochstein, Brett McGurk, and President Joe Biden, or is it President-elect Trump, who's been wielding an immense amount of raw power just sitting in Palm Beach?
Based on the reporting I've seen, on the Israeli side, they're keen to push a ceasefire as a gift to who?
To Trump.
Not to President Biden.
Because they want to make sure that there's one thing less on his agenda when he walks in. But you can imagine this is politics. Both sides are going to say they were the reason why the deal got done.
Let's get to some more politics. Republican lawmakers expressing concern over the national security review of Nippon Steel's proposed takeover of U.S. Steel, calling on the White House to preserve critical documents and raising the prospect of a congressional probe. This carries on and on, it continues.
Yeah, at the same time that Japan's prime minister asked President Joe Biden to approve the Nippon Steel deal before he leaves office. So it really raises a question of just how much of a security this issue was, national security versus a transactional or specific election-related issue for unions. I will say this is going to be a very interesting time when we're talking about transactional types of trade issues and national security issues. Watch this space going forward.
I just don't know why the letter came out now. We have been talking about on this program for weeks, actually months, that it feels like speculation is pretty obvious that CFIUS was used for a political use case because of votes in Pennsylvania. So why is this letter coming out after the election? Two, it was the President-elect Trump who was the first individual that came out and said he would block this deal. So if the GOP is asking for these documents now, but Trump still says he would block this deal, it's actually going to complicate how far these Republican House members get.
Without a doubt, I think a lot of people agree with you that CFIUS has become a political tool in a way that it's not meant to.
It's not. It's meant to be a national security wielding position to make sure that you can protect some of these deals potentially going to the United States. But now, basically, you could put anything into CFIUS and it becomes a black hole. We have no insight into it.
That's the latest on that front. Here's the latest on the Federal Reserve. You know what investors are doing. They're debating the outcome of the December meeting, a cut or a pause. Matt Lazzetti of Deutsche Bank is writing this. Our baseline sees a 25 basis point cut in December, though that's a close call. Thereafter, and here's the big call, we expect an extended pause, which keeps the Fed funds rate above 4% into 2026. Matt joins us now for more. Matt, good morning.
Great to be here.
Been looking forward to doing this with you. 2025, a pause for the whole year. What underpins it?
So I think there's two things. One is just the details of the underlying economy that we see now, which is the consumer has remained resilient. We've got upward revisions to household income. The labor market looks more resilient and more stable than what we thought. And inflation has been higher over the past several months. I think you'll see that when the Fed updates their forecasts. The unemployment rate is going to come down, growth is going to come up, inflation is going to come up. So that dynamic, I think, definitely supports the Fed on a more extended pause. Overlay with that, policy changes that we expect, extensions of tax cuts, perhaps further tax cuts, tariff policy which lifts inflation, all of that leads to this dynamic of stronger growth, we think, higher inflation that stays above 2.5%, and a neutral policy rate that's closer to 4%, and the Fed's above 4%.
There's a key line in everything you said. You'll see that when the Fed updates its forecasts. When will they update the forecast to reflect that? Is it at the December meeting, or do they wait until March?
So I don't think they fully reflect that in December. I think we have some historical precedent for them to begin to reflect upcoming economic policies. We look back to December of 2016. Back at that time, they significantly ramped up their discussions around the policy outlook for tax cuts. I think about half of Fed officials in December 2016 actually began to build tax cuts into their policies. More officials actually saw it as a shift in the distribution of risks. So they were reflecting stronger growth risks. I think for December, that's where to look for it. Officials will think about inflation risk being to the upside, growth risk being to the upside, and it'll probably take details in March or June for them to fully reflect that.
What policies are inflationary? And I ask this because we've heard from a lot of people who talk about tariffs being disinflationary. If it reduces growth, we've seen that in certain case studies. Which is the most inflationary of these policies?
Yeah, so for us, it's the combination of the policies, which would be one, demand-side policies via tax policy, including additional tax cuts that we have built into the forecast. Two, we do see tariff policies as being inflationary. Now, there's absolutely a lot of margins that can mitigate that impact. But I think if you go back to the 2018-2019 experience, you absolutely saw it. So, for example, look at household appliances in 2018. There was just this steady downtrend. Tariffs hit, and there was a steady uptrend after that. So we do have some experience with this. We do think that both of those policies are going to be inflationary. But to your point about the market responding and not much market response to these things, I think there's a few things. One, there's just some uncertainty about what will actually be implemented. Two, from a market perspective, from a bond market perspective, you do have negative growth effects at the same time that you have positive inflation effects. It's a difficult one, I think, for the market to completely digest, and it creates a tension in the Fed's dual mandate, which creates uncertainty as well.
Where are we in terms of economic momentum? This is something that I think people have gotten more wrong than the expectations even of policy, given how much a lot of the economic data has outperformed. Are we coming in with more momentum than the Fed realizes? Or is it pretty much that the Fed understands that there is momentum, but maybe is overly confident in their prior projections about just how disinflation, how much it can continue?
I think absolutely more momentum than what the Fed had built in September. Absolutely more momentum than what consensus has built in. I think if you look at consensus expectations in our own over the past 3 years, growth has continually outperformed expectations. Now, for 2025, consensus has growth kind of coming back down below 2% again. The Fed has it coming back close to 2%. Our view is there's significant momentum. Financial conditions are easy. You have a business supportive administration coming in, which we think helps sentiment. We're going to see that in some indicators. All that together, I think, leads growth to 2.5% or above next year. Basically, a continuation of the sturdy economic growth that we've seen.
When it comes to the policies coming out of Washington, you talk about this counterbalance on tariffs. Say if Scott Bessent didn't get Treasury and that went to Robert Lighthizer. What do you make of just literally the last 48 hours? We get Scott Bessent at Treasury, but then Donald Trump comes out and says, I still want tariffs.
Yeah, so I think we take kind of two views here. One is we fundamentally believe that tariffs are coming. So we have built into our forecast a 20 percentage point increase in tariffs on China next year. So the 10% that was kind of floated overnight would be fully consistent with what we have built in. And then we expect this universal baseline tariff in 2026. The second question is about how that gets implemented, how it gets phased in. And so we have it starting somewhat smaller than the maximalist approach and getting phased in over time. I think the past 48 hours I would view as the market took Scott Bessent's Treasury nomination as a very positive sign on tariffs. And I think President-elect Trump, perhaps didn't like the idea that it was perceived as being really watering down the tariff focus, and also doesn't want to have a perception that the Treasury Secretary is going to be the one that's setting policy, that he is the one setting policy. And so I very much think that we intentionally got this kind of announcements overnight following that nomination.
I always say personnel is policy, and Scott Bessent, how he thinks that says what's going to mean potentially from the Treasury, or potentially going to be a pushback on individuals that are going to want to implement tariffs. Who are those individuals? Because we don't have anyone yet at USTR. Or does it matter is what you're saying, because Trump's making all the decisions?
No, I think Trump, first and foremost, will be the driving force for what happens with trade policy. Where Robert Lighthizer ends up, I think, will be important. And we kind of don't know that yet.
If he ends up.
If he ends up within the administration. But I think, if you go back to Trump and Lighthizer, it's a several-decade focus on tariff policy and trade policy. It's not something new or that they baked up in 2015, 2016. Trump was writing articles in the 1980s about trade with Japan, 1990s about NAFTA. we shouldn't anticipate that this just goes away all of a sudden when he gets elected. He will deliver on some of those policies. I think we can view, the voices that are going to be in the room best potentially as a counterbalance to that, but not something that eliminates the policies.
Everyone's bullish right now. We're talking about how high can you go with some of your S&P forecasts across the street. And then Neela Richardson was on here, and she said, people still haven't caught up when it comes to their salaries, when it comes to just the inflationary impact and how their real wages haven't caught up. And she said, you're starting to see some gains, but they're fragile, and they could be disrupted if prices really do go back up, if you do see another bout of inflation. Are we underestimating the risk that an increase in inflation could really torpedo some of this momentum when it comes to certainly consumer sentiment, but the sort of melt up in a way that just isn't getting priced at all?
So we absolutely have a population that is far more sensitive to inflation than it's been in decades. And therefore, I think tariff policies this time is very different than tariff policies back in 2018, 2019. Back in that period, we had inflation that was low, you had a little bit of a bump in inflation, but it didn't really factor into, I think, psychology and sentiment and household confidence. So I do think it's a different environment and therefore greater risks around it. At the same time, I think we should view that inflation bump as being offset by potentially other factors. So a strengthening in the labor market, a strengthening in nominal wage growth, the savings rate, which was substantially revised higher recently, wealth-to-income ratios are record high levels. So yes, I think that at the margin that would be something that certainly is adverse or negative, but there are a number of these other factors that are quite supportive for the consumer.
Matt Lazzetti of Deutsche Bank. Matt, it's good to see you.
Good to see you too.
An interesting call for 2025, that's for sure. Equity futures right now in the S&P positive by 0.25%. With an update on stories elsewhere, here is your Bloomberg Brief. Kohl's shares falling in early trading, the retailer reporting a 9.3% decrease in comparable sales and cutting its forecast for the year. Soft sales in its apparel and footwear business continuing to weigh on the business. That stock is down 16%. Elsewhere, check out this. Walmart joining a growing list of businesses reversing course on diversity, equity, and inclusion initiatives. The company will no longer consider race and gender to boost diversity when granting supplier contracts and stop collecting demographic data when assessing financing eligibility. They're not the only ones. And finally, in sports, the Baltimore Ravens beating the LA Chargers in Monday Night Football. The reigning MVP, Lamar Jackson, throwing 2 touchdown passes and running for a third, with running back Derrick Henry adding 140 rushing yards.
You want my take on sports?
I actually wanted your take on Walmart, to be honest with you.
Oh, yeah. Well, I actually think it's interesting because there was an anti-DEI activist who threatened to boycott Walmart heading into Black Friday. And in the past, companies have said, no, we'll keep going with this. You can't cow us. This time, it was sort of the anti-Bud moment. No, we're cowed, or the Target moment that we've seen in the past.
Important lessons. Why? I think for some companies, and I'm not going to sit here and name it, it was never about virtue, it was always about selling things. And they thought by going in a different direction, a certain direction, it supported sales. And what you've seen over the last few years, I think, is a much more aggressive conservative consumer making their point and saying, well, actually, no, your company's not aligned with my values, and I'm not going to shop there anymore. Bud Light's a great example, Target's another one, and Walmart's trying to get out in front of that.
You put this really well. There's been a vibe shift. And this, to me, highlights just how much there's been a vibe shift.
A massive shift, and they're all trying to catch up, and catch up quickly, because I think for a lot of companies in corporate America, they've fallen out of sync with the average voter. And I think we've seen that in the election of the past few weeks.
Yeah, let's see how this shakes out exactly at a time where, frankly, the cabinet nominees of Donald Trump are everything from Latino to gay, but it just isn't talked about, right? So I guess that there's a real question of how we talk about inclusion in a new society.
Get back to meritocracy. It seems to be the argument, and it's an argument that a lot of people are making at the moment. Up next on the program, tariff threats fueling the US dollar.
The impact, I think, on the dollar of the tariff policy, and it could be substantial. The dollar is the cleanest way of playing not just the tariff story, but this tariff fiscal sort of tax giveaway story.
That conversation up next. Live from New York, this is Bloomberg.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Jumpstart your trading day on Bloomberg Open Interest.
Single stock stories that are driving the open bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond. These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track of what's buzzing in markets.
Players who are shaping the narrative.
If you have been a pun.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Free trading day on Bloomberg.
We spent some time here on the broader presidential race.
Let's focus on European politics. Why don't politics might play out?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF.
way of playing not just the tariff story, but this tariff fiscal sort of tax giveaway story.
So here's the latest this morning. The dollar rallying after President-elect Donald Trump threatens 25% tariffs on all goods from Mexico and Canada, along with an additional 10% levy on products from China. Terry Wiseman of Macquarie Group writing, a strong dollar helps to help mitigate the effect on purchasing power of higher tariffs. We'd focus on Scott Bessent's and Donald Trump's strong dollar advocacy as a defining aspect of the economic agenda under Trump 2.0. Terry joins us now for more. Terry, good morning. More dollar strength to come then? Is that your call?
I certainly think that's the policy that this new administration would like to pursue. And I think one reason is that they've simply learned from what happened under the Biden administration that inflation itself is highly politically damaging for whatever administration happens to hold power during the time that inflation takes place. I think Donald Trump, to some extent, owes his win to the inflation, but at the same time, he doesn't want to fall victim to it. And I think that he does suspect that higher tariffs will cause some inflation. I think the only cure for that in his mind is to allow the dollar to appreciate. So I'm not saying the dollar will get stronger, but I certainly believe that there's no compulsion on the part of this administration to allow it to weaken, this next administration.
Because it's a natural disinflationary force. At the same time, it does kind of undermine some of the foreign direct investment by way of exports, right? And we've seen that already. We've seen exports fall off a cliff from the United States because it's getting so expensive for the rest of the world. Is that going to kind of backfire in the internals of this?
Yeah, it might. And I think this gets back to why they're doing the tariffs to begin with. It doesn't seem, based on even what President-elect Trump said last night, that the reason they want the tariffs is to make the U.S. economy more competitive. He singled out two other reasons for why he wanted tariffs against Mexico and Canada. as an indirect method of drug interdiction effectively, and also to help control the border, or at least have the Mexicans help control the border. So it seems that he's moving away from the use of tariffs as a competitiveness story. We kind of know that also because he's also invoked tariffs to try to raise revenue. He wants to do that so that he can justify cutting taxes. So the overall justification for tariffs seems to have migrated from Trump 1.0 to Trump 2.0. A little less emphasis on jobs and competitiveness, a little bit more emphasis on the use of tariffs for other things. And maybe that's why he'll get from tariffs what he wants, despite the fact that as a result of the dollar appreciating by way of tariffs, we may get a diminishment of U.S. competitiveness.
If this is a sort of negotiating tool of sorts to try to get other policy into effect, not necessarily a goal in and of itself, which is essentially baked into that assumption, do you fade all of these moves that we see with the peso and the Canadian dollar?
Yeah, not necessarily, and I'll tell you why. Let's say Trump, on day one, as he threatens to do, slaps these tariffs on Mexico. First of all, I don't think they'll be effective on day one, even if he announces them on day one. There'll be a court challenge immediately, and a federal judge may issue an injunction effectively delaying the tariffs until either the USMCA comes under judicial review or the International Economic Emergency Powers Act comes under judicial review as it pertains to this decree. That may take many months. It may take many years for this to work through the courts, during which you don't have these tariffs on Mexico. But think about it from Mexico's perspective. They're waiting for the courts to make a decision. They don't know which way it's going to go. They also come under review for the USMCA in 2026. I think they're going to be under a lot of pressure, whether the tariffs come into effect on day one or not, to concede to the new administration's demands.
Don't we already see that with Canada and a phone call from their leader?
Absolutely, and we see it with Mexico too, right? There's a lot of talk, and you can read the stories in the press about the Mexicans not issuing licenses to Chinese factories that want to set up next to assembly plants in Mexico. And I've even seen the Mexican president talk about her willingness to concede to the U.S. on the matter of Chinese capital in Mexico. So I do think they're going to concede. The question is how quickly, but ultimately this is a game of chicken, and it has to be treated as such.
And it's only just the beginning. On one front, as you pointed out, it's on the border, it's on narcotics, it's on immigration. For now, Europe's been spared. Watch this space.
I mean, pretty much the consensus is Europe is going to be the victim. It's just sort of how badly and whether it can really do anything to kind of counter that. But that's what you see in the price action. That's what you hear from people. It's sort of parity. Could it go below? I mean, what's your base case?
I think the base case is parity now going into next year for a lot of people.
So
Terry, it's good to see you. We appreciate your time. Have a happy Thanksgiving, sir.
Thank you, and you too.
Terry Wiseman there of Macquarie on the US dollar. The US dollar a whole lot stronger this morning following several weeks of strength. In fact, 2 months of strength on the US dollar. I think it's 8 consecutive weeks of gains now for DXY. Up next on the program, we'll catch up with Liz Ann Saunders of Charles Schwab, Dan Ives of Wedbush, Sarah House of Wells Fargo, and Brent Schutte of Northwestern Mutual. The third hour of Bloomberg Surveillance is up next.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms. And he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
As we look into 2025, you've obviously now shifted from election uncertainty to policy uncertainty.
There are real risks right now. There are real concerns in the market that we haven't seen in past years.
Markets are likely going to be volatile over the coming year, but probably still upward.
The market's gotten ahead of itself a little bit. There's still this very bifurcated political environment. It still feels unstable.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The rally continues. Day 6, that was yesterday. Day 7, potentially, this morning. So far, so good. Equity futures on the S&P 500 firmer here by 0.25% on the S&P. On the Nasdaq 100, up by 1/3. If you want some moves, check out foreign exchange. King dollar. As Larry Kudlow used to say every first Friday of every single month with me, King dollar still reigns supreme. Look at it against the Canadian dollar. Look at it against the Mexican peso. Trade is at the epicenter of these moves this morning.
Yeah, the threat of potentially additional tariffs on China and 25% tariffs on Mexico and Canada. The question that a lot of people are asking is, how much is this the starting salvo for negotiations? How much is this a signaling tool to indicate where his priorities are going to be when he takes office, which is still months away because it's only been about 3 weeks since the election?
Well, Matt Lazzetti's point was this was a signal that DJT is in charge. President-elect Donald Trump is in charge, not Scott Bessent, who got the nod for Treasury, and the market and everyone, the commentary was talking about how this is an individual who might be pragmatic when it comes to tariffs. Yes, potentially he will be that voice in the room, but at the end of the day, this is going to be the Trump policies he's campaigned on, but he is a deal maker and he is a negotiator, and that is probably why it is coming out right before he's going to be inaugurated, because already you see leaders lining up to get those talks done now before January 20th.
They've said repeatedly they're looking for a great realignment of things like global trade. And to balance that, the FX channel is really, really important. Peter Cheer over at Academy wrote this recently. I expect a stronger dollar to offset much of any impact from tariffs that do get implemented. And you're seeing the dollar doing some of that work this morning.
So just putting together what Terry Wiseman and Matt Lazzetti were saying, Terry was basically saying that a strong dollar is necessary to tamp down inflation, basically that U.S. can import goods for cheaper, so essentially because of the strong dollar, which will tamp down some of the inflation, which essentially torpedoed the chances of the Democrats winning. That's what a lot of people are saying. On the flip side, you have to start wondering what this means for inflation to still be picking up, because there are other channels, and this is a very different moment than back in 2016 in terms of deficit, in terms of also just how much strength there is.
So just to identify some obvious tension, TD, Mark McCormick, I think has sort of captured this brilliantly. Successful reindustrialization of the US requires a weaker dollar and a reduction of the trade deficit. Buckle up. That's where the tension is.
Especially when you look at some of the export data for the United States. It has fallen to the lowest since the depths of the pandemic. You can see it absolutely collapsing because people do not want to export or import goods from the United States because it is getting too expensive. Again, a lot of tensions with the market pushback in response to Trump policies. We're finessing that, or seeing that finesse possibly by whack-a-mole. You got Scott Bessent, you get some tariffs. What do we get tomorrow? Which is the reason why people are wondering what kind of check there is by the market.
Well, John, you mentioned Larry Kudlow. His name was circulating around. He was the former NEC director. We're still waiting on who is going to be the NEC director in Trump 2.0. Names like Kevin Hassett have come up, Kevin Warsh, even Peter Navarro. And then, of course, where does Ambassador Lighthizer come into play? Does he even enter in Trump 2.0? Given the fact that Howard Lutnick has taken on an expanded role when it comes to trade and tariffs, we're still missing the trade ambassador, yet Trump is truthing about trade.
NEC is really important. And what Larry Kudlow did with that position a number of years ago, I thought was equally as important. He turned it into a position to almost be the cheerleader of the administration, which I have to say is something that the Biden administration's been lacking now for the last 4 years. He was always at the forefront of every policy decision, and he was always celebrating it and spinning it in a more positive way.
That's the reason why it's interesting to me that a lot of the cabinet members are former TV personalities that are communicators who can act in those roles. I'm looking at who the number twos are in all those potential cabinet positions.
Equity futures right now still rallying. We're up by 0.2% on the S&P. Coming up this hour, we'll catch up with Liz Ann Saunders of Charles Schwab as the dollar gains on Trump's tariff threat. Dan Ives of Wedbush as Tesla gets left out of a California EV proposal. And Sarah House of Wells Fargo on why the Fed will continue to ease. We begin this hour with stocks looking to add to a 6-day winning streak, even as Trump's latest tariff proposal introduces just a little bit of market volatility. Liz Ann Saunders of Charles Schwab saying momentum favors the bulls, at least near term. But frothy sentiment could foreshadow some consolidation. Expect volatility may generally remain fairly low, but increased likelihood of more volatility spikes based on policy announcements and implementations next year. Liz Ann Saunders joins us now for more. Liz Ann, always fantastic to see your face and catch up with you. What are we seeing evidence of this morning? Do you think we're comfortable with tariffs in a way that maybe we weren't 8 years ago?
Perhaps, although I am a little bit surprised that we've got a decent opening per the futures, given the announcement. I think the commentary you guys just had in the last few minutes was really spot on in terms of all of these cross currents. The stronger dollar putting downward pressure, all else equal, on inflation, at least via commodity prices that are priced in dollar, yet tariffs are essentially stagflationary. Then you've got on the other side of it potential tax policy and corporate tax cuts. That actually, we are an importing nation, so leaving the tariffs aside, that actually serves to potentially worsen the trade deficit, and ostensibly one of the goals of tariffs is to improve the trade deficit. So we dealt with this in 2018, and maybe there's different reasons for tariffs this time, but we are going to have to deal with those cross currents and that, you know, plus minus on the magnet of how these impact the broader macro backdrop.
Liz Ann, you pointed to frothy sentiment, and I'm wondering if everyone is baking in all the positive, the potential positive from the policies. What are the negatives that you don't think that people are baking in that could potentially lead to some consolidation, as you said?
Well, again, the inflationary side of things and the fact that, I'll say it again, all else equal, tariffs put upward pressure on inflation and they put downward pressure on growth. One of the most amazing things to me in this election season, it's one of the reasons why I bristle a bit at some of the shorthand that is done in headlining tariffs. I saw a headline this morning that said United States, based on Trump's proposal, is going to charge Canada and Mexico. That's not how tariffs work. It's a charge on U.S. companies importing those products and goods from China and Mexico. I get the end game of what it's trying to affect, but I've had so many conversations with people who have this aha moment, and they actually didn't realize that that's how tariffs work. If they're not in the business, if they're not living, eating, and breathing it every day like we are. So I think the actual impact on things like inflation, the pass-through that happens to consumers like we saw in 2018, the fact that tariffs for the goods where we had tariffs in 2018, from the point those were enacted, you saw the inflation in those particular tariff-impacted goods go straight up versus the rest of, say, an index like CPI fairly flat. So I think an actual increase in inflation is something that is not, I think, anticipated in general by market participants, and I think that could be the big surprise.
One thing I don't have a clear view on, Lizanne, is how resilient the consumer is to potential uptick in inflation. And I say that as we get different results from different companies that paint very different pictures. You have the Walmarts of the world that are delivering better than expected outlooks. And then you have Kohl's and Best Buy coming out this morning downplaying their expectations for the year, talking about, in particular, weaker clothing spending. How much do we get a sense that the consumer is vulnerable, is fragile to even a small uptick in inflation in a way that they haven't in the past when we saw inflation come up or, frankly, when tariffs went on?
I think it depends on where you are on the spectrum for the consumer. I don't think we can look at the consumer through a monolithic lens. You've already seen it in confidence measures and spending, in some of the details around spending. Big difference up the income spectrum, up the wealth spectrum versus down the income and wealth spectrum. So I think that becomes a factor. We have to fine-tooth comb analysis of the consumer. But in addition, I think the overarching support for the consumer beyond those traditional metrics like the savings rate, which of course has come down in the post-pandemic to more normal levels, the excess savings story, that's pretty much drawn down other than the upper income spectrum. But I think the labor market really holds the key. I think if we were to see any weakening in the labor market beyond some of the hurricane-related impacts that we have seen, I think the feed through to consumption would be a bit more swift than maybe what we might have expected to see tied to the inflation story.
Lizanne, it's that time of the year where we have the same debates looking out to 2025, a new year. It's market cap versus equal weight. It's large versus small. I just want to sit on the small caps just for a moment. The Russell is up 11% this month, November 2024. In November 2020, it was also up by a similar amount, up by something like 18. Going back to November 2016, double-digit gains as well. What is it about November of an election year that gets people excited about small caps over the last 3 cycles?
Well, a lot of it has to do with stimulus, and in the last couple of cycles also tariffs and the perception that domestic-oriented companies are better served in a trade war environment. But it has been fairly short-lived. There are traditional seasonals, though, that kick in for small caps. Small caps generally do fairly well in the November to April or May period of time. So the knowledge of that may kick in. But much as I said to Lisa's question about the consumer, I don't think we can look at small caps through a monolithic lens. The Russell 2000 is a very, very large index, 43% of which are negative earnings companies. A fairly large percent are zombie companies, too. And in the past year to 2 years, we've seen a very, very wide spread between the performance of the profitable companies within the Russell versus the non-profitable companies. So I think there's opportunities down the cap spectrum, but I don't think you can sacrifice quality, especially on that profitability scale.
And if you do a Christmas quiz in the office this year, for anyone, not just Charles Schwab, ask them to name 5 companies on the Russell, and we'll see how well they do. Lizanne, it's good to see you. As always, Lizanne Saunders there at Charles Schwab. Have a very happy Thanksgiving. Lisa, we played that game before. I can't name 5. I'm not sure how many other people can name 5.
Give me a little bit more time.
Come on. For the membership?
Yeah, I'm looking at the membership.
MSTR,
and it's not working at all.
Good work, guys.
We're really crushing it. It's true. Okay, and you look at the entire market cap, and it's dwarfed by NVIDIA. So that's the reason why we talk about NVIDIA as much as we do the Russell 2000, because frankly, on a market cap basis, it matters. That said, it sort of is the direct read-through of Fed policy, of some of these other effects on the consumer into the economy. It's used as a proxy for all those private companies out there too. I'm killing it because I didn't know any names, so I'm just going to keep talking.
underperformance on the Russell today. We're down by about 0.1%. With an update on stories elsewhere this morning, here is your Bloomberg brief. Let's start with this. Best Buy shares falling in the pre-market. The company reporting third quarter earnings that missed Wall Street estimates and slashing its full-year sales forecast on sluggish demand for electronics and other appliances. That stock recovering just a touch. We're down about 1%. Elsewhere, Rivian receiving preliminary approval for a $6.6 billion federal loan to support the construction of its plant in Georgia. Plans to build the plant were halted earlier this year in a decision aimed at cutting costs, but the company still needs to meet certain conditions to finalize the loan. That stock is up by close to 10%. And finally, Citi is cutting back on the number of its year-end promotions. The Financial Times reporting that 2,000 employees could get a bump in pay and title in the next month. That's down from 8,000 in previous rounds. That's the latest from Citigroup this morning. Up next, the morning calls. Plus, we'll catch up with Dan Ives of Wedbush on Musk versus Newsom as the EV tax credit battle continues to heat up. That conversation is just around the corner. Lisa's looking at me like she's worked out 5 names on the Russell.
Okay.
What have you got?
Duolingo, how do you know me so well? Carvana,
Shake Shack.
MicroStrategy, Microcomputer. I'm looking at the biggest names.
Okay.
I'm sure Shake Shack's there. I'm just looking down this.
Is Abercrombie still there?
Well, I haven't gotten there yet.
Okay,
Come
right.
on, you can't give me a full comprehensive
You were
quiz.
looking at me like you wanted to say something.
Okay.
We'll be back in 2 minutes where Lisa will have a breakdown of the membership at the Russell. Stay tuned. From New York, this is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The opening bell, 1 hour and about 14 minutes away. Equity futures doing okay, up by 0.2% on the S&P 500. Let's get you some morning calls. First up, Citi upgrading Chevron to buy, noting its significant underperformance compared to ExxonMobil. Your second call from UBS, assuming coverage of Southwest with a sell rating, pointing to weak margin performance and uncertainty over its new service and revenue strategy. That stock is down about 1%. And finally, HSBC downgrading Goldman Sachs to hold, saying high market expectations are leaving room for disappointment. The stock is negative by about 0.6%. Turning to Tesla, California Governor Gavin Newsom excluding Elon Musk company from a proposal that would offer EV rebates to buyers if a federal subsidy is repealed. Newsom's office telling Bloomberg it's due to the plan's market share limitations. Musk calling the proposal insane in a post on X. Dan Ives of Wedbush saying this: with the majority of EVs sold in California being Teslas, this would be a risky political move in our view. Dan joins us for more. Dan, good morning.
Great to be here.
Do you agree it's insane?
Look, yeah, Jake Paul and Tyson. Now you got Newsom and Musk. I mean, this is going to be a battle, right? Like, And ultimately, it's a political battle, but the only EVs that are made in California are Teslas. So if they actually go down this path, I believe this could be some threats where more and more jobs move from Fremont to
Texas.
Austin. But at the end of the day, federal tax, as we've talked about, that's going to get ripped away. That's bullish for Tesla. You're going to see this back and forth.
Before we get into that, let's just dig into this relationship. What is behind it? We know what was behind it with Biden. What this basically came down to was union workers not being at Tesla in a way that they were at GM and Ford. What's this one about?
Look, I think, first of all, I mean, Musk was iced out of the Biden administration for years, right? It was really focused on Detroit in terms of GM, Ford, and others. If you look here, is that there's a beef clearly between Musk and Newsom. But essentially what this is really about is that you're going to have these tax credits from a federal perspective taken away. California clearly trying to do something to stop that. But the reality is that the money ran out on this program in California.
So, Dan, this is important. The support at a federal level is clearly with Elon Musk. At a state level in places like California, it looks like because of this tension, he's losing it. How important is that relationship at both the state and federal level when it comes to things like autonomous driving?
State, we view it as much less than from a federal perspective, because the golden goose here is autonomous. You know, we believe the autonomous piece is worth $1 trillion alone to Tesla. Federal regulatory spiderweb essentially gets ripped away, and I think that's significant. Now, California, Newsom clearly will try to fight some of the autonomous, some of the unsupervised FSD, but this is going to be something that's really going to continue. But I believe Tesla is going to have significant sort of room to what I view as elevate themselves within autonomous, and that's really what I believe is the key to this Tesla story. It's about AI and autonomous. What Newsom's doing here when it comes to California, this is essentially almost a sideshow to the broader story here with Tesla, which is why it's really been a Cinderella story since Trump got in because of the Musk bet.
But when it comes to autonomous driving and the federal regulations, it's not a light switch. This has to go through Congress. Elon Musk and his proximity to power cannot just basically get this over the finish line.
Of course, not in itself, but could move it significantly toward the finish line. So, he gets it to the 2-yard line. Right now, it's at the 40-yard line. 50, midfield. So he can get to the 2-yard line, but that's also why with the red sweep and just relative to what we see with coming out of the Beltway, being there over the last week, we feel like there's a groundswell for autonomous. But no doubt, when it comes to EVs...
You feel there's a groundswell in Congress as well?
I believe there's a groundswell. The reason I think there's a groundswell based on our view and what we hear is because of what's happened in China. Because China is now going so far ahead of the U.S. when it comes to autonomous because of the lack of really regulatory spiderweb. That's why Trump, you have an AI czar come in. But who's going to be, from an AI czar perspective, Musk is going to have a front row seat to really everything here. And that's why it continues to be the poker bet for the ages for Musk, betting on Trump.
So basically, and this sort of goes to the heart, in some ways, of the beef between Newsom and Musk, the idea that it's one thing to be transactional in your policies if you're in the White House and you're in Washington, D.C. It's another if you're sitting at the state. And the White House will probably trump that. There is just a question of how far that will go. Do you actually believe that there will be policies crafted specifically to benefit Tesla over some of the rivals in the United States because of Musk's closeness to the White House?
Yeah, I think, look, clearly, Tesla is in just a much different situation relative to autonomous. So they have, first of all, they have the scale and scope on EVs. So you pull the tax credit, gives them a huge advantage just relative, to federal subsidies. But on autonomous, it's their world. Everyone else pays rent, along with Waymo. So when you look at this relative to other automakers, they're essentially almost going to have to license from Tesla. But when it comes to the state level, you look at Newsom, look, does this end up in a UFC fight? I don't know. I mean, this is going to continue to play out between this beef, Newsom and Musk.
This goes beyond just Tesla. There was a report out of The Information saying that Google CEO called Donald Trump and Elon Musk was on the phone with him, and he was surprised by that. You talk about space and some of the space exploration and what's going to happen with the NASA budget. How much can you extrapolate out that the Musk halo is really something that you have to sort of get on the bandwagon as an investor, simply because there are going to be certain policies that will just de facto benefit him because of his closeness with the president.
I mean, I think you said it as best as I could say. I mean, this Musk and Trump, this is not going away. I actually see this something that's going to continue to expand, and it's going to be from China tariff discussions. When you look at Musk's ability in terms of President Xi and his relationship there, when it comes to AI, when it comes to autonomous EVs, that's why it comes down to Detroit. Musk, he wasn't at the cool kids table. Now there's a knock at the door. It's Elon. And I think that's really the issue right now that's starting to happen, is that everyone's starting to realize that this Musk-Trump alliance is going to continue in a lot of ways. Newsom's clearly trying to get into that, but I continue to believe that's probably going to be a battle he'll ultimately lose, because you continue going down that path, okay, more jobs go from Fremont to Austin. Oh, and second thought, maybe we won't exclude them.
So this is Tesla in California. You also cover GM. What's your reaction to the tariffs that have been threatened on Mexico, on Canada, given that we know that these automakers have quite a presence south of the border?
I mean, if you're Mary right now, Mary Barra, I mean, here it is. You have Musk that's going to be front row on Trump. Now you got these tariffs. I mean, you talk about heartburn from a GM perspective. Well, for a company right now, that's actually, I think it's some of the best execution that I've seen.
You've still got to outperform on the stock.
Because to me, if you look at execution, I still don't believe the stock is getting the right value relative to.
How exposed are they, though, to this tariff story? And if he goes through with it, can you still put an outperform on that stock?
They're exposed. We got to see how it all plays out. I continue to think that bark will be a little worse than the bite, you know, in terms of as it all plays out. But for GM, for a company that's humming right now, it's kind of been a little 1-2 punch in that 313 area code.
So GM, the only reason I brought up GM is not about the tariffs, it's about F1. Expanding the grid to an 11th team. You went to Vegas over the weekend. What was your impression of things?
I mean, my first F1, and Farrell's had an influence in that. Look, that was just an epic week in terms of just being experienced F1, being part of the Ferrari team there. It was just an unbelievable experience. I recommend everyone. You know, I went from Farrell to the Netflix show.
John's an influencer now.
He's he's actually an F1 influencer. So I went from Farrell to the Netflix show to going to an F1 race. Next thing I know, it could be in Monaco. You never know where this is going to go.
Are you a signed-up member of the Tifosi now? Are you a Ferrari fan?
I am a signed-up Ferrari fan now. It starts with Penn State, but now Ferrari is part of that.
Okay, that's quite a contrast, Penn State and Ferrari.
But it goes. But you're talking about both elite.
You're barbelled.
Exactly.
You're barbelled.
You barbell the strategy.
Dan, thank you. It's good to see you.
Great.
Dan Ives of Wedbush. Thank you, sir.
Penn State, Ferrari, both are elite. I love that. That's the way to go. And also, can I just say, I now know what the grid is. I've actually looked it up. So you're an influencer.
I'm pleased you're up to speed now. What about the Russell? How's that going?
I'm looking at team interview with Dan in Monaco.
Full analysis.
Let's do it.
Up next on the program, Sarah House of Wells Fargo, Brent Schutte of Northwestern Mutual, looking ahead to a busy 24 hours of economic data before the Thanksgiving holidays. We count you down to the opening bell. Equity futures still doing okay. We're positive on the S&P 500 by 0.2%.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
60 minutes away from the opening bell. Equity futures right now on the S&P 500 positive. We're positive across the board here, almost. Up by 0.2% on the S&P. On the Nasdaq, up by 0.2% on the Russell, which Lisa is really deep diving on at the moment. The small caps down about 1/3%. As we count you down to the opening bell, let's get you some morning movers. We can do that with Manus Cranny. Good morning, Manus.
Jonathan, a very good morning. Abercrombie & Fitch. No, I don't actually buy the T-shirts anymore. It's a sort of a generational thing, but here you go. There's a squeak in the numbers. The margins just slipped 16%. The market was looking for 16.8%. The Abercrombie brand itself sales 11%, just a little bit lighter, but Hollister banging away up 21%. But it just shows you the slightest off in your report can be injurious to the numbers. Autos, you just had a conversation with Wedbush, with Dan Ives. He talked about Mary Barra having double heartburn from Trump, Elon Musk relationship and the tariff narrative this morning. 16% of the autos that come into this country come from Mexico in 2024, 2.5 million vehicles. From Canada, 7% of the US sales come in from Canada. This is as much about politics of free trade as it is about gunning for some of the US auto companies. A quick name check for Zoom. They no longer use the word video. The reincarnation of Zoom, but whatever way you look at it, stock is down 7%. Look, the bar on this is pretty high, Jonathan. They guided in line, $1.29 to $1.30. That is in line with estimates, and you've got to deliver a lot better than that to get a boost on your report day. It's the lowest churn ever in this company. They've got an AI assist, ding, ding, ding. 59% increase in monthly users on that. Jonathan, good morning.
Tough morning for that name. Manus Cranny, good morning to you, sir. Thank you. 60 minutes away from that cash open with equity futures here up by 0.2%. Economists already starting to price in the impact of President-elect Donald Trump's tariff threats. Sarah House of Wells Fargo writing, not only will tariffs weigh on US real GDP growth next year, but economies with significant export exposure to the United States likely will be negatively affected as well. Under our tariff assumptions, we forecast the global economy will grow only 2.5% in 2025, down from 3% in 2024. Sarah joins us now for more. Sarah, welcome to the program. Let's talk about your tariff assumptions. What are they for countries like Mexico, for China, for Europe, for the EU?
Sure, Jonathan. So, of course, there's still a lot of uncertainty over the extent and timing in which tariffs go into effect. But we believe that this is a foundational policy tool in the world of Trump. So we saw that, I think, with last night's announcement. And we do think that we'll get some tariffs to an extent. So right now we're modeling that we'd get effectively about half of the 60% tariff that was threatened on China and about half of that universal tariff. And we see that probably sometime late in the year, in the second half of next year, which would have a depressing effect on growth in the second half, as well as make it more difficult for inflation to get all the way back to the Fed's 2% target.
Are you expecting the Federal Reserve to do the same exercise in December, or is that still too early for them?
I think it's still a little bit too early for them. So we saw in Powell's press conference that he's still a bit reticent to, I think, actually begin to model in some of these assumptions. I think they want more details. They want to get closer to implementation. But I do think that it'll start to maybe color how Fed officials are interpreting some of the incoming data, but also I think more importantly, some of the balance of risk. So while I don't think it'll be necessarily part of the baseline assumptions, I do think it's going to play into how they're viewing the risks around their current projections and their current expectations for the path of policy.
Sarah, this is such a complicated thing to price out because you're talking about potentially suppressed growth with companies that have big exports from the U.S. really getting hit at the same time that inflation goes up. I want to start with the strong dollar. How much could that dampen the inflationary impact of some of these tariffs, as some people are suggesting?
Yeah, so I think that is one of the aspects that could actually help mute the overall impact on inflation. So, when we think about tariffs, we think of an initial price bump, but then that fades as, you could think of this as more or less a one-off shock. But part of that's going to be muted by the fact that we are expecting the dollar to climb further. I think, in fact, over the next year and a half or so, we could see it climb to some of the highest levels that we've seen since 2002. And so that's going to have some offsetting effects, the same way that I think the overall weaker growth dynamics coming from the fact that consumer purchasing power isn't going to be stretching as far under this higher inflation is also going to be weighing down on inflation in maybe some of the segments that aren't directly exposed to tariffs.
Are we having the wrong conversation when we focus on tariffs? Should we be focusing more on immigration and what the read-through with respect to inflation is, given the fact that even the latest announcement by President-elect Donald Trump really addressed some of the immigration issues and asking basically for Mexico and Canada to clamp down on a certain illegal migration across the border? Is that potentially the more inflationary of the policies?
So I think it's really a discussion about the timing impact. So when we see those tariffs go into effect, I think you're likely to see the upward pressure on inflation more quickly. But I think some of the implications from tighter immigration policy, the slowing effect that that's going to have on labor force growth, I think that's going to take longer to show up. So there's a bit of a temporal mismatch here when we think about the timing of some of these policies. But I think you're right. It's not just about tariffs in terms of the potential policy changes and what that does to inflationary pressures, what that does to growth. It's also about the immigration policy. It's also about the tax policy. So there's a lot of different cross currents and a lot of different factors to consider in the current environment in the upcoming year.
Sarah, when it comes to the upcoming Fed meeting, does Truth Social post count as part of the totality of data?
I don't know if they're going to be, I think taking the threat of 25% tariffs on Mexico and Canada as part of announced policy. So we need to, I think, probably at least get the administration started. But again, I think it goes back to where some of the risks lie. That clearly this is a preferred policy tool of President-elect Trump, and he's also prepared to move quickly on it. But I think for the December meeting, I think they're still looking at, okay, what do we know about policy right now? What are we seeing in terms of the incoming data? And so we think it's still going to be a pretty close call in terms of whether we go through with that 25 basis point cut, or maybe we start to see that slower pace of easing begin as early as the December meeting.
So Sarah, just quickly, base case for 2025 on Fed action. What is it right now for you and the team?
Yeah, so we're looking for another 100 basis points of easing, including we think they will end up going in December. So that would bring the Fed funds rate to a range of 3.5% to 3.75%. So still likely a little bit restrictive in our view and our estimates.
Sarah House of Wells Fargo. Sarah, thank you. Looking for another 100 basis point of easing cuts from the Federal Reserve over the next 12 months. Matt Lazzetti was on the program something like 45 minutes ago, an hour ago, over at Deutsche Bank. Matt making the argument that maybe they go 25 in December and then they are done for 2025. His expectations for policy changes from the incoming administration, what it would mean for growth and inflation, leading to him to believe the Federal Reserve is going to have to back away. The question that we asked is how quickly would the Federal Reserve put that in their forecasts And he thinks they're going to start doing that at the December meeting.
And he believes that this economy has a lot more momentum than the Fed thought back in September, the last time they came out with projections, and certainly a lot of people had expected as well. It's sort of different across the street, right? Some people are saying there still is weakness coming down the pike. We just haven't seen it yet. Deutsche Bank saying we're starting from a stronger position than people realize. These policies are going to have a different impact than they did last time around just because of that.
We're all reading the same tea leaves. We'll read some more a little bit later on this afternoon when we get some Fed minutes. Joining us now to have a look ahead to that is Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. I don't think you're going to get what you want to get out of the Fed minutes because Sarah House put it well. Jay Powell at his press conference was talking about it's too early to start looking at what the new president is going to do. And the minutes are of a meeting that was before Powell's press conference. So I think basically we'll see the same thing that he said, that if anything, members agreed it was too early to start thinking about that. The question is, what are they thinking about inflation? Do they think that the sudden uptick that we have seen in CPI and PPI and essentially what we're going to see in PCE tomorrow, does that mean we go into 2025 with inflation problem again? And what does that mean for their outlook? It's probably too early to say. They'll probably look past it, but that's, I think, the only thing you might get out of the minutes this time.
Mike, we have gotten some commentary over the past 24 hours from Chicago's Austin Goolsbee as well as Minneapolis Fed President Neil Kashkari, both of them saying that they probably will cut by 25 basis points and believe that there is this feeling that inflation is continuing its downward trajectory. Can we look to those as kind of representing the mainstream as will be reflected in the meeting minutes that get released today?
I don't know that they would be in the mainstream, but the mainstream isn't going to be very wide at this point. The mainstream is basically going to call for continuing with what they're doing. These two are more on the more dovish side. The problem here is, again, information. All forecasts are valid until January 20th of next year, and then we just don't know. You look at what happened overnight with the tariff threat. The gas buddy guy, Patrick DeHaan, put pencil to paper, told Catherine Rampell from the Washington Post that those tariffs, if imposed, would add 35 cents a gallon to gasoline in the upper Midwest. That would be an inflation problem for the Fed, and that would also be a problem for Donald Trump. So are these things going to happen? The Fed just doesn't know.
Which is why some people think if they do go forward with this, there'll be some carve-outs. So I imagine there'll be plenty of carve-outs. Michael, thank you, sir. Mike McKee down in Washington, D.C. Joining us now to continue this conversation, Brent Schutte of Northwestern Mutual. Brent, welcome back to the program. We've got the threat of an additional 10% tariff on imports from China, the threat of 25% tariffs on products from Mexico and Canada. What changed for you overnight, if anything at all?
Nothing. I think the market is pricing in a lot of smooth sailing going ahead. So you've seen a market up and to the right. I think the conversation that you've been having back and forth with the different guests today just shows that there's tons of uncertainty that's still out there. And I think the political uncertainty, even though the election is over, is still pretty high. And I remind you that back in the first term, there was VIX spikes to over 30 a couple different times as tariffs came on, as they came off, as we had tweets. And so I think just in general, I think the market is going to be a bit more volatile in 2025 as we try to sort through all the different things that you're pointing out in your show this morning.
And it's difficult to really catch the signal from the noise, and that's something that certainly people are trying to do. You aren't necessarily changing any of your assumptions based on some of the tariff proposals. What will you adjust to? What kind of policies would you potentially change your allocation as a result of?
Yeah, I mean, that's always an unknown. I think the bottom line is we're still later in an economic cycle. Yes, the unemployment rate has risen, but we are still short of workers across the board. And so to me, later in an economic cycle, inflation is still a risk. The Fed, we're talking about, will they cut or won't they cut? Look, there's still weakness within the economy. You can see the bifurcation, and that to me still raises risk. And you have an equity market that is priced for perfection, especially the S&P 500, which now has a negative earnings or equity risk premium. And so given all these different variables, we remind investors to stay diversified, and we are looking for parts of the market that are actually cheap, which I bring you back to small and mid-cap stocks, which I know you've had a discussion on this morning. Those are parts of the market that I think, no matter what your time horizon is, I think will do better, especially as you stretch that horizon, I should say.
Yeah, we've been looking all at 1-800-Flowers and supermicro computers. I've been looking extensively in the Russell 2000, Brett. I am just wondering, though, you're talking about how we are at the end of a cycle. And then you said there still is the risk of inflation and a host of other things. Typically, the end of the cycle has ended in some sort of recession or downturn or growth dip that we really aren't seeing. And I think that that's really the reason why people are wondering, are we actually at the end of a cycle? How do you view that in terms of the biggest risk? Is it a downturn in growth or is it an increase in inflation?
I think those two things go together. I mean, look, the demarcation line between who's actually done well and who hasn't in this economy is the impact on interest rates. And so to me, one way or the other, rates have to go lower. Otherwise, stock valuations don't make sense. Otherwise, inflation, I don't think, comes down. And so to me, that's where I think the rubber meets the road. And I think the risk of an economic slowdown are still out there. And if we don't have an economic slowdown, I wonder if inflation can actually stay sustainably at 2%. And so I think those two are connected. And I think ultimately, at some point, we are going to have a recession. I think the question is when. We've had economic cycle over time, but I don't think that lasts indefinitely.
Recession as in next year, in the next 12 months, that soon?
This is always a hard question to answer. I mean, look, there are certainly risks that are out there. And I think as an investor, when you're later in a cycle, when valuations are elevated and no one wants to pay attention to those, when investor exuberance is out there, you want to just be a bit more careful. And that's why we've skewed just a bit more towards the fixed income side of the market for that safety and security that I know longer term we may have higher inflation. There certainly is risk of U.S. debt that's been rising. But at the end of the day, I think we've seen recently that when stock markets falter just a bit, people still do run to the safety of the Treasury market. And I think that's going to be the path as you look into 2025 and think about potential economic weakness on the horizon.
When you look at 2025, and if you're expecting potential weakness, then I imagine you have cuts priced in.
Well, I think it's going to be hard for the Fed to continue cutting rates absent some sort of economic slowdown. And so that's where I think it's kind of this binary outcome. If you expect lots of rate cuts, I think that's because you expect an economic slowdown that continues to evolve. If you don't expect a lot of rate cuts, that's where I think that we're in an economic cycle over time. And I don't think the Fed is going to be able to aggressively cut rates without that slowdown emerging.
Brent, it's that time of year where we start to reflect on 2024, not just look ahead to the following year, which is 2025. Brent, we had this conversation to start the program this morning. I'd like to finish the program with you on the same point. When we looked at 12 months this time last year, the average forecast on the S&P 500 was 4,800. And I think one of the most bullish forecasts out there was 5,200. We're north of 6K. Brent, what didn't we anticipate? And are there some lessons to gather to learn from 2024 to apply to 25?
I think the big lesson that comes to fruition here is that no one knows for certain what's exactly going to happen. And that's why I think investors need to remain diversified. I think overall the economy did stay stronger. Look, if you look at different charts, different graphs, things that have historically predicted a recession in the past, they didn't come to fruition this time. That's where I think this cycle has been unique, but I don't think it ends differently than all other cycles unless we figured out a way to do that, which I don't think we have. And that's where I think as you look into 2025, you need to be a bit skeptical about continued economic growth, about a stock market that trades at 23 times forward 12-month earnings with a bond market yielding 4.3%. Those things don't go together. We are out of economic equilibrium. We are out of market equilibrium. The question is, how do we get back to that equilibrium? And as Lisa noted in her opening comments there, typically that is through a recession. Maybe this time is different, but I typically don't utter those words because they don't come true.
Hey, Brent, it's good to see you, sir. Thank you. Brent Schutte there of Northwestern Mutual on the equity market, bonds, and remaining diversified. Some headlines for you. I just want to cross over to this very quickly. If you are just joining us, of course, I imagine you've seen the news already. An additional 10% tariff proposed on China coming from President-elect Donald Trump, 25% tariffs on products from Mexico and Canada. We know that the Canadian Prime Minister got on the phone pretty quickly to contact the President-elect, and the Mexican President is going to have something to say as well.
Yeah, President Sheinbaum sending a letter, or is being reported to have sent a letter to Trump on migration and fentanyl, probably saying, look, we are your ally. We are going to cooperate with you. We are on your side. It kind of goes to all of the measures that they're going to try to get into place to try to have a better negotiating hand.
So within 24 hours, the threats are actually working in terms of Canada, Mexico, getting on the phone or sending a letter to make sure that they can work with the incoming president, and maybe they're going to have to give something up in order to maybe not have that hard of a stick. The issue is, and what all our guests have been saying, something has to bite at some point. for the threats to continue to work throughout the Trump presidency.
Well, and to be very clear, some of this was already in the works. How much of this is an advertising ploy on all sides to sort of shore up, do a dog and pony show to say, look, we're on your side, and Trump saying, everybody else can look, I'm taking a hard line and they're coming and kowtowing to me. So I don't know how much to read into this versus the noise factor.
The message is pretty clear. Shut it down. Equity futures right now in the S&P 500 positive by 0.2%. Markets are shrugging it off. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. Israel and Hezbollah are getting closer to a ceasefire deal, even as both sides keep firing rockets and artillery at each other. Israel's Security Cabinet is expected to vote on an agreement today. It is still unclear if Hezbollah will agree to Israeli proposals. Elsewhere, looking at the Russell, Abercrombie & Fitch reporting sales in line with estimates and boosting its full-year forecast. Shares falling at the pre-market as analysts were expecting stronger growth after 7 straight quarters of year-over-year revenue gains. That stock is down just a touch by 0.5%. And finally, Intel securing $7.9 billion in federal grants from the Biden administration, the deal marking the largest direct subsidy from a program to boost U.S. chip production. People familiar with the matter telling Bloomberg Intel will get money for projects in Arizona, Oregon, and New Mexico. Intel up in a pre-market by 0.75%.
So what else can we do to remember that there is still a president in the White House who's trying to get things done?
Well, and the Chips and Science Act was voted on in a bipartisan fashion. What's interesting about this is actually it was supposed to be north or around the 8 handle. Now they're coming in a little bit lower with $7.9 billion, but Intel really needs these funds.
That company's doing very poorly, and I think some people are surprised that they're getting anywhere near that number. Up next on the program, setting you up for the day ahead, we'll be looking at a couple of retailers going into the opening bell, live from New York. You're watching Bloomberg TV.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
You're spoken, sorry.
My voice and my conversation, my poetry, you know.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
"37 minutes away from the opening bell. Stock's still doing okay. 6-day winning streak coming into Tuesday and adding some weight to the rally, up 1/4% on the S&P 500. The trading diary looks a little something like this. Consumer confidence coming at 10 a.m. Eastern time, followed by Fed minutes at 2 p.m. Tomorrow, durable goods, core PCE, and another round of jobless claims. On Thursday, U.S. markets closed for Thanksgiving. Nordstrom reporting after the closing bell. Following disappointing results from Kohl's and Best Buy this morning, we're joined now by Mary Ross Gilbert of Bloomberg Intelligence for more. Mary, let's start with Kohl's. What's going wrong over there?
Yeah, so at Kohl's, there's something happening on the execution side. And I think what this explains, John, is that yesterday, after the close, the company announced a new CEO who's going to join effective in January. I think it's January 15th. And Ashley Buchanan, who's the new CEO, he's coming from Michael Stores, and he's attributed with right-siding that business. But he also has incredible tenure from Walmart, where he was the chief merchant and also the CEO of e-commerce for the U.S. business. So I think that he's known for improving profitability and generating free cash flow. So he's coming to right-size Kohl's, because whenever you have a company reporting a high single-digit or double-digit decline in comp sales, it's alarming. It's particularly alarming for Kohl's because they have Sephora, and Sephora is a real draw and generates revenues. And so that just goes to show you that the core business is down in the double digits, and that's what's concerning, and thus the transition with the CEO that we're seeing there.
Mary, is this a specific execution story, or is this a story of competition ratcheted up across the retail sector by the behemoth of Walmart and also Amazon?
Yes, so Lisa, I think that's exactly what we're seeing. What's happening is they're losing share, likely to off-price, likely to the mass merchants. We saw great numbers coming out of Walmart. They also cited apparel was one of the better performing categories for them. Now, the other thing to consider is I'm sure they were negatively impacted by warm weather. That's something we're seeing across the board. But for most retailers that are executing, if there was a miss, it was a slight miss. We saw that, for example, with Burlington, with their numbers out today. Their comp sales rose just 1%. Analysts were expecting a rise of 2.2%. But the company said, look, cold weather garb, that makes up about 15% of our sales.
So McKenzie in London, these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Currency market, and you can see that's where those tariff threats are really making a dent. You're taking a look at dollar Mexican peso right now. The dollar 1.3% stronger against the peso. We'll discuss that. But then you train your eyes on the bond market. We did see an initial pop when it came to yields, but now we're pretty much unchanged relative to where we were. The 10-year Treasury yield about 2 basis points higher, but we're still below 430, Shanali.
Leave you for a couple days, and there's just been a huge drop-off. Hey, we're going to get back to those retailers that you've been talking about here. A lot going on here. Kohl's now down almost 19% pre-market. It trimmed its full-year sales outlook, citing weakness in its apparel and footwear businesses. We're also taking a look at Best Buy as well, now down more than 2% pre-market. It cut its full-year comparable sales guidance on sluggish demand for electronics heading into the holiday season. The CEO calling things uneven over there on the path forward. Dick's Sporting Goods, though, here's an outlier, boosting its full-year earnings forecast after a strong back-to-school season. We're going to talk more about this in a moment. Dick's now up almost 10% pre-market. Amazing divergence going on in the retail world, Katie.
Yeah, it's really interesting. It's a real dichotomy that's emerged. You have winners and you have losers. Of course, one of the big losers being Kohl's. We'll talk about that. But Dick's, as Shanali was highlighting, seems to be an early winner. And then you have the likes of Smuckers, for example, managing to find consumers who are still willing to spend. And it's like we've been talking about, when it comes to the economic consumer landscape right now, you really can't paint with a broad brush.
It's kind of a cocktail of challenges here between the tariff strategy being proposed by the president-elect, as well as where the consumer stands, still facing some inflationary pressures. Really excited to bring our audience some of your CEO conversation over at Smuckers as well.
It's so interesting talking to CEOs, as we've been doing on this program, about how do you plan? You know, you have these missives posted on social media, Truth Social in particular last night, when it comes to those tariffs on China, Mexico, and Canada. It's really hard to know what you actually have to do as an executive making decisions.
And a lot of people finally saying, okay, the inflation impact, we will see how it goes. But in the near term, not planning is costly, planning is also costly. We're going to talk about what these CEOs are planning for. President-elect Donald Trump had been quiet on his self-professed favorite word, tariffs, until yesterday, of course, because now for the first time since he won the election, Trump took to his website Truth Social yesterday to vow imposing tariffs on Canada and Mexico and raising them on China. Joining us now, Brendan Murray, who leads our global trade coverage. You did see some immediate reaction, right? You saw Canada's Justin Trudeau call the president-elect pretty much right away. But what are companies now having to do to prepare, especially with how much future uncertainty there is on any tariff policy above and beyond what he said just less than 24 hours ago?
Yeah, exactly. So we heard in Trump's first term a lot of these tariff threats delivered through social media and other ways. You can basically classify them in two categories. Some of them are threats, idle threats that are meant to drive parties to the negotiating table or or try to achieve some sort of geopolitical outcome. And then there are some more sort of legitimate threats that we saw as well. I think you can classify this one, the 25% tariff on Canada and Mexico and the 10% tariff on China due to drug smuggling and immigration problems that the president sees. You can classify these as bluster. A 25% tariff on Mexico and Canada would destroy the U.S. auto industry, so it doesn't seem even feasible that could go through. Whether he'll be successful in getting some sort of outcome from the three parties, the three top U.S. trading partners, is yet to be seen. But it's early already. He hasn't even been sworn in yet, and we're already seeing the tariff threats fly.
Well, I'm glad that you highlighted the auto industry because you're absolutely seeing that reaction pre-market in those shares. But you highlight what is the key question here. What, of course, is a negotiating tactic, a bargaining chip, and what will actually turn into policy. Can we talk about Canada a little bit more, though? Because, of course, this seems to be about migrants. This seems to be about drugs. And actually, Bloomberg has reported that Trudeau pointed out to Trump that the number of migrants who cross the Canadian border into the U.S. is minuscule compared to Mexico. So how does Canada factor in here?
Yeah, it's hard to really understand what's behind Trump's social media posts like this, but you got to figure that the U.S. is in a free trade zone with Canada and Mexico, so he has to sort of include the two other trading partners. Canada is a huge exporter to the U.S. of energy, so you want to see your energy costs go up. Put a 25% tariff on Canadian natural gas imports, and that's exactly what will happen. Some of Trump's former advisors in recent weeks have even advised against doing that. So the fact that Canada was brought into this, I think, was just the NAFTA, the USMCA agreement connects all three economies, so they had to be part of this.
Yeah, absolutely, and you're completely right. Oil, gas, energy, that is the biggest Canadian export to the U.S. So it'll be fascinating to see how this one evolves. Our thanks, of course, to Brendan Murray. Meanwhile, let's broaden out this conversation now and bring in Ritz-Holt's chief market strategist, Callie Cox, joining us now. And Callie, Chanel and I were just talking about how difficult it is for C-suite executives, CEOs, to plan around the potential of tariffs. How should investors be treating this, some of which may, of course, be a negotiating tactic?
The CEOs, why not think of the strategists here? What we're telling clients right now is that all of this policy is just so far from being set in stone. Your prior guest just mentioned that Trump hasn't even been sworn in yet. So I think that's why we're seeing a muted reaction to these tariff threats in markets today. And, from somebody who has to talk about the data that we see and, refrain from speculating too much into the future, I think it's really just too soon to tell what's real, what's just talk. And, we have these stages, too, that all of these policies need to get through. Will these policies, come before Congress? Will Congress actually pass these policies? Some of them are being talked about via executive order, but we just don't know enough to really, factor that into our outlook. So we're just not, we're not trying to put too much weight in it at this time.
You know, Callie, it's interesting. When I think about tariffs, I think about the potentially stronger dollar, even above and beyond where we have been seeing it. Katie was talking a little earlier about the dollar against the peso, among other currencies that would be very significantly impacted. But then you also think about the earnings picture here. Companies that make money not in dollars that are American companies that have big presences abroad, including in China. That's kind of where we've seen the rubber hit the road many times before. Stronger dollar, weaker international earnings. How does this play out ultimately when you think about corporate earnings heading into next year? Basically, what do investors have to prepare for?
Where you're seeing the biggest effect from policy speculation, Shonali. The dollar is up about 6 or 7% since election day, and that's a huge jump. I mean, it doesn't sound like a lot, especially when the other things we talk about are Facebook or Meta and Nvidia moves, but the U.S. dollar is up pretty steeply since election day, which means that investors think that some of this policy will go through, and it could weigh on the rest of the world. The problem is a lot of S&P 500 companies are global. S&P companies get about 40% of their revenue from outside our borders. So because of that, you really can't smite global trade for too long. And if anything, when it comes to tariffs, we're trying not to say too much, but we are highlighting for our clients what the risks of tariffs could be, since markets are mainly focused on the rewards here of a pro-America policy promise.
Well, let's bring this conversation to the stock market. You correctly highlight that kind of move in the dollar is huge for the currency market. It's not supposed to move that much. Another area of the market that's been moving a lot is those small caps, basically for that reason, the idea being that these are really domestically focused businesses, and as such, the threat of tariffs, maybe they're a little bit insulated here. At least that's one of the narratives I've heard to explain what we're seeing in the small cap space. How sustainable do you think that strength is?
Katie, I think that's one of the narratives, but the biggest narrative around small caps right now is deregulation. And the reason why I say that is because the sector that's been leading small caps by a mile has been those regional banks, those smaller banks. And if you think about regulation and the pressure of regulation on different sectors, banks have it the worst. And regional banks for so long have been held back by the compliance costs around regulation and the fact that as smaller banks, you don't really have many deregulated spaces to lean on when it comes to revenue and, trying to boost that net interest income and profit. So smaller banks are feeling the relief from possible deregulation. I think if it happens, of course, that's a big if, that could be a major, boost to those smaller banks. And it's hard to say what the boost could be right now without specific outlined policy or specific outlined plans on the deregulation front. But right now, markets seem euphoric around the potential for deregulation, and that's helping small caps. And I think that there is some rotation still going on between, large cap tech and the stocks that have done well to the stocks that have been a little more unloved this year.
Callie, we were talking about dollar uncertainty and how it impacts certain companies. I love Katie's point about the small caps as well. The other place that really matters cross-asset for small caps is the bond market. And you've seen just on the heels of the Bessent pick for Treasury Secretary, among other things, but largely because of that, a 12 basis point drop-off in the 10-year. You were at 440 heading into the end of last week. You are now below 430. And how much of a difference does that type of bond market volatility make when you are investing in the equity market when so many of these companies still rely on leverage?
We did see a big move in the 10-year yesterday, but the 10-year is way too high. I think that's what markets are telling us across the board. And, it's high for good reasons. Economic expectations were way too low in September and October, and then the economy hurdled them, which is a good thing. But right now, expectations are a bit high, Shonali. I think that's why you're seeing the volatility in the bond market that we're seeing right now. I don't expect this to be the end of it. Quite honestly, I think the 10-year could fall below 4% and, not shock markets too much just because there's been so much movement on the other end. But right now, what we're telling clients is that there's a lot of reward there, especially if you believe the economy is in a more moderate spot and isn't really blowing things out of the water right now. So see it as an opportunity, pick up on those classic recession hedges that we see in longer term treasury bonds. And, don't try to overthink day-to-day moves.
Kelly, we thank you so much for your time. Of course, always taking that measured approach ahead in what has been a very volatile market. Kelly Cox from Ritholtz Wealth. Now, coming up, a number of retailers reporting earnings this morning as we've been talking about it, and two going in completely opposite directions. We're going to take a look at those winners and losers next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, the fact that if you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position because, again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Now to high interest, a look at what's making headlines around the world. Starting with the scoop, Qualcomm's takeover interest in Intel is fading and is upending chances of one of the tech sector's largest ever deals. Complexities involved in acquiring the whole of Intel put Qualcomm off. That's according to Bloomberg sources. There is a possibility that Qualcomm comes back to buy just pieces of the chip giant. Meanwhile, we're going to talk about Intel securing $7.9 billion in federal grants from the Biden administration. The deal marks the largest direct subsidy from a program to boost U.S. chip production. Sources tell Bloomberg that Intel will get money for projects in Arizona, Oregon, and New Mexico. Shifting over to Walmart, joining a growing list of businesses here, reversing course on diversity, equity, and inclusion initiatives. The company will no longer consider race and gender to boost diversity when granting supplier contracts and stop collecting demographic data when assessing financing eligibility. Katie.
Let's also take a look at what's going on with the latest retail earnings because we have a bonanza this morning. You take a look at shares of Dick's Sporting Goods, they're in the green. That's after they lifted their profit outlook. A similar story for J.M. Smucker, raised its earnings guidance, it beat and raised there on EPS. So that's the good news. Let's take a look at the bad news. You have Kohl's and Burlington all falling after reporting disappointing results. Here to recap all of it and give us some context is Bloomberg's Shelley Banjo. She heads up global biz coverage for us over at Bloomberg News. We have to talk about Kohl's, down 19%, down 30% for the year through yesterday's close. This is a company that really needed some good news, and we did not get it this morning.
No, and it's going to take a little bit of time for this to turn around. I mean, they've had 3 CEOs in 3 years, or will have the 3rd CEO that they just announced yesterday will take over in January. Every single time, it's a promise of a turnaround, but that turnaround has not come yet.
Well, to that end, how much of this is a standalone story? Because they're talking about consumers having different preferences here. You're clearly seeing some of those preferences move over. You see, for example, Abercrombie & Fitch, yes, they raised, maybe not enough. We're seeing them down pre-market, but where are consumers actually going?
Yeah, I think it's a story of 2 sides, right? There's the haves and the have-nots. The consumers are being incredibly choosy. Inflation is still persistent. The growth might be slowing, but it still feels expensive. We saw that on the heels of the presidential election. Consumers are not feeling great about spending. The holidays are coming, and they're really choosing with their dollars. What am I going to prioritize, and what am I not going to prioritize? They're not going to spend any money, discretionary money, on things that are not most important to them.
And I want to correct myself. Abercrombie was down a little earlier, now up about 5%, more than 5% pre-market.
Yeah, it's pretty amazing. You take a look at that turnaround there. I do want to talk a little bit about how physicality factors into this, if at all. You think about department stores, and the close had a great interview with the CEO of Bloomingdale's, actually, saying that basically the department store model needs to change. You think about some of the issues that Kohl's is facing right now. Obviously, a chain in department stores, very reliant on that model. I just wonder what the future possibly looks like.
Yeah, you're seeing some of that success play out actually at Dick's. They're adding climbing walls, experimental reasons to bring you into the store. And then while you're there, you're throwing in a new bat, a new glove, whatnot. Kohl's has been trying to do that, bringing in these mini Sephora stores and these other tie-ins with Babies R Us, but it's not actually translating to sales around the rest of the store. People are just coming into that Sephora, buying that stuff from that Sephora, and then leaving the Kohl's rather than actually spending their money throughout the store.
It's interesting because a lot of the headline around Dick's was this back-to-school season. And I'm wondering how much the seasonality matters. We're heading into holiday season. A lot of us are going out buying Christmas trees after this. I mean, how much share can some of these firms gain heading into the end of the year with what you've said about the consumer?
Yeah, one thing we started seeing this season, which was different than in years past, is that people were spreading out their back-to-school shopping throughout the quarter and even saving some of that for holidays. So maybe not necessarily buying all the new backpacks and all the new sporting goods in September, but actually waiting, saying, I'm going to buy a little bit of it now, a little bit of it in the holidays. And so some of that is extending. That means the quarterly sales are a little bit more choppy in that way.
It's amazing that we haven't talked about tariffs yet, so maybe we should. Obviously, the talk of the morning, an additional 10% proposed on goods from China, 25% on all goods coming from Canada and Mexico. Of course, those are proposals. We'll see if they turn into actual policies. But what are you hearing from the American C-suite about how they're preparing for that possibility? We don't know specifics, but we know theoretically that more tariffs are coming.
Yeah, so I think that's the big dark cloud over this entire industry. And I don't think any investor that is putting money into retail stocks is not thinking about, okay, what is the tariff exposure here? We did see some very early companies, most notably Steve Madden, come out and say, we are already shifting our stuff out of China into different countries. But the question is, if the tariffs are going to be extremely high also in Canada, extremely high also in Mexico, where does that shift production? Because some of these items just can't actually be produced in the United States at this point.
And we've heard that over and over again. I keep coming back to that conversation we had with the Brooks Running CEO about how it's just so expensive to make things in the U.S. And we don't know the specifics of the tariffs, but we know it's going to be painful.
Right. It's really interesting. We keep on asking all these CEOs, what does that price of that sneaker that's $150 today, what is it next year? Shelley, we have to leave it there. We thank you so much for joining us. Of course, that is Shelley Banjo, leads our global business coverage. Global business is a hard place to be in right now, but of course, a lot of promise as well. We're seeing some of those stocks higher on the day. Coming up next hour, we're going to talk about the consumer, trade, and tariffs with Neil Dutta of Renaissance. Stick with us for that conversation. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Welcome back to Bloomberg Open Interest. A quick check on futures right now. You can see the S&P 500, the NASDAQ 100 managing to poke into the green. The Russell 2000, it got so close to a record high yesterday's close, but now down a little bit. But let's go to the single stock level and let's talk about J.M. Smucker. Shares up 6%. Of course, they reported this morning they beat on EPS. They also raised their full year EPS forecast. And it was interesting, Chanel. I actually was on the phone with Mark Smucker. He's the CEO of J.M. Smucker. And he said they're seeing growth across all categories right now, including coffee, which was really interesting to me because coffee prices have been all over the place. Here's what he had to say specifically. Coffee still experiencing significant inflation. In fact, yesterday, for the first time in 13 or 14 years, they saw Arabica hit $3 per pound. So they did take pricing in June and October, but despite that, they had very good performance in coffee in the quarter. I guess it's one of those things you need to buy, coffee, so that would help.
Inflation resistant. If you pull up a chart of Arabica over the 1 year, it's more than 70% higher in that 1 year period. So I guess people are getting used to these higher prices in certain categories. What did he say about some of the more classical brands like Hostess?
So Hostess, they recently acquired Hostess, and it's performing well, but they did say that because Hostess is a discretionary snack, one of the things they continue to see is pressure when it comes to inflation, discretionary spending. As such, they're launching $1 packs of small size portions, which is interesting. It's sort of like the fast food playbook.
Hostess deflation? Something like that?
Something like that. Really interesting, though. We'll cover all these stocks you need to watch and more at the open, coming up next.
First time
got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi. Right. And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley, and LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, we are moments away from the start of trading on this Tuesday. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. You can see futures trying to shake off some of those rattles that we saw pre-market from those tariff threats coming out on Truth Social from President-elect Donald Trump, talking about an additional 10% tariff on Chinese goods, a 25% tariff on goods from Mexico, from Canada as well. You're seeing more of an impact in the bonds and the currency markets, which we'll get to. But right now at the stock market open, you can see everyone's clapping, of course. What this means for corporate America, still a big unknown. What this potentially means for the Federal Reserve, if some of these negotiating chips actually turn into policy, also a big question mark. In any case, you take a look at these major indexes just a couple seconds into trading. You can see that the S&P 500 managing to climb about 0.2%, a little bit better if you take a look at your big tech index. The NASDAQ 100 higher by 3 to 0.4%. The small caps. It's such a sad story. We were so close to closing at a record for the small cap index yesterday. That would have been the first record since about November 2021. We didn't quite get there, and we're slipping so far this morning. The small cap's down about 0.5%. We'll see how that evolves. But let's take a look under the hood now, because we have to talk about retail, and we have to start with Kohl's, trimming its full-year sales outlook, citing weakness in its apparel and its footwear businesses. You can see that is worth a 17-18% plunge. Then you take a look at Best Buy, cutting its full-year comp sales guidance on sluggish demand for electronics heading into that crucial holiday season. That's another sad story. So let's end on a green note, because Dick's, meanwhile, it boosted its full-year earnings forecast after a strong back-to-school season. That's good for almost a 3% gain, Shonali.
I am so sorry, Katie. I've got another sad story over here. We're looking at Zoom down another 7% as the market opens. Shares are falling after earnings didn't meet high expectations from Wall Street. The stock has climbed 60% since August and has been trading at its highest level since 2022. Also taking a look here at Rivian, because it won preliminary approval for a $6.6 billion federal loan that will go toward constructing a factory in Georgia, made in America, right? You have Rivian up about 1.6%. We're going to stick with cars here, because we're going to take a look at how Trump's proposed tariffs will impact auto markets with Bloomberg's Abigail Doolittle.
Well, not surprisingly, Shonali, we're seeing declines for the big automakers here. Ford, General Motors, and Stellantis all down. And of course, President-elect Trump yesterday talking about these tariffs, 25% tariffs in particular on Mexico and Canada. China, we don't know the specifics. So the reason the automakers are taking a big hit, Ford has 2 plants that produce roughly 400,000 vehicles per year. General Motors, many plants. Stellantis, not a U.S. company, but 27% of their autos are produced there. So these big declines. In terms of the particulars that I was just mentioning, it is also interesting. Baird is giving some color on what these tariffs could do. Of course, those autos and parts also made in China, but that it could actually cut sales by 1 million vehicles or more per year. So that could really be pretty painful. In terms of the amount of trading that the U.S. does with both Mexico and Canada. You can see for Mexico, it's closer to 130 billion. Canada, it's 104 billion. Now, what's really interesting, Katie, some of my sources have told me that China in the past, prior to the previous Trump administration tariffs, that trade number would have been much bigger, but that China has started to export some of its goods to both Canada and Mexico, and then they come into the U.S. So it's going to be interesting, of course, to see how all of this plays out for the U.S.'s biggest trading partners and the tariffs that appear to be ahead.
Yeah, you can absolutely say that again. Abigail Doolittle, thank you so much. A quick check here on shares of Amgen, really plunging at the bell right now. Of course, we saw weight loss shot results from this drug maker. They have an experimental obesity shot. It did help patients lose up to 20% of their body weight in this year-long trial, but potentially more side effects than investors had been hoping for. Interesting, of course, on the same day that President Biden is proposing Medicare and Medicaid coverage of obesity drugs. We're going to unpack all of that in just a little bit, but let's get back to that tariff discussion and what it means for the markets, because I'm pleased to say that we're joined now by Jim Caron. He is the CIO of Cross Asset Solutions over at Morgan Stanley Investment Management. Jim, it's great to see you in person.
Great to see you.
Let's start with tariffs,
okay.
Of course. We were having the conversation earlier, how much of this is actually going to turn into policy, what this means in terms of bargaining chips, but how are you thinking this through as an investor with the information that you have right now?
So it's very unclear. I mean, you know, Trump's been talking about tariffs for about 2 years. Here he is now president-elect. And I don't think that we should be surprised that this is top of mind for him. Obviously, the timing and the release of these things that come out. Look, 25% on Mexico and Canada. Is this a bargaining chip? Is this just a prelude? Is this an opening ante to the whole discussion that we're going to have? It probably is. And I think the risk that the market has to really face right now is taking these things verbatim and extrapolating it into the future and saying, well, then that means this, and then that means this, and you create this path of uncertainty based on a statement that we don't really know the full validity or the full heft or how deep he's willing to go, or is this just a negotiating tactic? So I think the market's reaction is appropriate. They took it at face value. They said, okay, it's a tariff. Let's see how this plays out. And as we can see from the bond markets and we can see from the equity markets, it's not really creating too much disruption.
But should it be? I mean, if you think about it, if you're a CEO, you're navigating a company, might be a multinational one, you have the president-elect saying he's going to do something that is well above and beyond what they have seen before, don't you have to prepare for that? And if you have to prepare for it, wouldn't there be a read-through effect to the consumer that is buying their products?
Absolutely. So I think that most of corporate America has to be on the defensive, because the other aspect of this is, where are these tariffs going to be targeted? Is it just an across-the-board, all the way through every single product, or is it going to be more targeted, or is there an objective in mind? In this case, it's immigration and fentanyl, and it's all these various things, right? How does that play into the discussion as well? So as a CEO, you do want to prepare, but what exactly are you preparing for? I mean, I think that you effectively say, I've got to be a little bit more cautious, build in some more cash, build in some more margins. I have to protect myself. But I think that's about as much as you can do, because there's no real details to the policy other than just a broad statement.
I actually just had that conversation with Mark Smucker. What are you doing? And he said, all we can do right now is scenario plan. We don't actually know what's going to happen. But you take this cross asset, which of course is your specialty. So there's the stock market piece. There's the reaction in the currency market. It seems like we're seeing more follow through in certain pairs, such as dollar peso, dollar loonie. But the bond market, not a huge reaction here. Is it already priced?
Well, here's what's very interesting, right? Here we are talking about tariffs. And yesterday, we had 10-year Treasury yields fall 10 basis points. Yesterday, we had the yield curve flatten and actually invert. It re-steepened just overnight. So all this tariff talk, based on the bond market, based on the shape of the yield curve, based on what's going on in bond yields themselves, seems to be relatively well socialized across the markets at this point. So, is this going to create the inflation impulse that people think? Well, so far in the bond market's really actually not really saying that it is at this point. Now, maybe it's already priced. Now, don't forget, bond yields came from 360, 370, a few months ago, and here we are at about 4.3%. Is a very, very painful move. So maybe this adjustment, as people built in a Trump victory, has already taken place, and we're kind of at this risk premium fair value point for the bond market to absorb this information about tariffs.
So whether it's the bond market or the equity market, what is not yet priced in? Where's the tail risk here?
So I think the tail risk is actually, it actually is an inflation impulse, right? So far what we're seeing is that inflation's coming down. We're going to get some PCE numbers. They should come out, relatively close to expected. But if there is an inflation impulse that comes from this, that unravels everything, because that stops the Fed from cutting interest rates. And lower rates is one of the things that's keeping multiples in the equity markets and valuations relatively high. It also would suggest that if we have a weakening labor market as we go forward, right? So it might be a hit to consumption. You could have a weakening labor market as a result of that. All of these things can really snowball and become a very, very bad scenario. And that's the tail risk. So far, it's early days, and we're not there yet.
Well, just to tie a bow on that thought, the fact that an inflation impulse would unravel everything, what market is least prepared for that? You think about some of the asset classes that really have been banking on inflation coming down. Where would that potentially hurt the most?
I actually think it's going to be in the credit markets for the most part, right? So the most overvalued asset in the marketplace today is probably the most vulnerable, and I would say that those would be investment grade and high yield credit spreads. Those spreads are extremely, extremely tight right now. So if we were to get an impulse towards higher interest rates, I think what we would also see is those spreads actually widen quite a bit. So not only are you not getting enough compensation in high yield and investment grade because of the tightness in spreads to take on this risk, but if there's a widening in spreads as yields go up at the same time, that's a double whammy for that market. So I think we need to be a little bit careful about our bond allocations in the investment grade and high yield space. Equities, the pricing, the margins, they have a little bit more wiggle room, but investment grade and high yield at these tight spread levels don't have a lot.
Yeah, markets very much shrugging off a lot of risk in those markets all year long, really. Jim, we thank you so much for joining us here on set. That is Jim Caron of Morgan Stanley Investment Management, going all across assets for us. A lot of complicated things to consider. Now, coming up, weight loss drugs spike. The stocks, at least, on Biden's proposal to cover obesity drugs under Medicaid and Medicare. You can see that movement there, and we're going to talk about it all next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never heard. Go.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg. Welcome back to Bloomberg Open Interest. A quick check on stocks. The S&P 500 mid-pack right now. Your big winner is big tech. The NASDAQ 100 up about 0.5%. Your small caps, the biggest loser, at least at this moment. This has been the leader in the markets, but at least for today, the Russell 2000 down about 0.6%. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, TD Cowen initiating Pinterest with a buy rating. The firm says that the online search platform is using large AI models to drive more relevant content and ads that should drive longer-term monetization. Pinterest pretty much unchanged at the moment. Next up, we have Daiwa saying that Target is no longer a buy. The firm downgrading the retailer to neutral, also cutting its price target by $40, with the analyst citing persistent uncertainty when it comes to the company's outlook. And finally, we have Baird initiating coverage of Bright Mind Biosciences with a buy rating. The biotech company is advancing into a new phase of testing for its epilepsy treatment, and the analyst says that the company's recent acquisition of Longboard Pharmaceuticals is also a positive catalyst. You can see shares up about 8.5%. Meanwhile, let's turn to the pharmaceutical stocks right now, such as Novo Nordisk and Eli Lilly, climbing in a big way this morning because the Biden administration is proposing a rule that would require the government to cover weight loss drugs through the Medicare and Medicaid systems. You also have Viking Therapeutics higher as well. Amgen, meanwhile, down in a big way after the obesity drug trial showed disappointing results. We're going to discuss all of this right now with Bloomberg Intelligence analyst Sam Fazeli joining us. And let's start with Medicare and Medicaid and get into the politics of it all. Because one of the big questions over the rally that we're seeing in Novo and Lilly today is whether the Biden administration will actually be able to push this through in time.
Yeah, I think there's going to be quite a lot of people who want this to happen. It's not a very large ticket, $35 billion over 9 years. You know, if you think about the size of the Inflation Reduction Act and the money's involved there, this is a drop in the ocean. It is a clear benefit for people that are Medicare enrollees or covered by Medicare. And therefore, I think it just makes a lot of sense for the health of the nation, too. The question, of course, is whether, if this does get put through, whether RFK Jr.'s views with regards to obesity drugs in general and how people should really lose weight, which is diet and exercise, which, of course, we've been trying to do for the past 30, 40 years with no success from a society perspective, whether he will be able to push against it as time comes. But we're optimistic that it will stick.
Sam, who are the winners and losers in this scenario? You did see differences in how the stocks were performing. And of course, you coincidentally had a separate set of headlines coming out of Amgen this morning, the stock being very significantly impacted here after its experimental obesity drug failed to outperform rivals, showed a high rate of side effects. What's the issue for Amgen here, and how do others gain, frankly, at their expense?
Yeah, so this seems to be happening on a regular basis. It was AstraZeneca, it was Roche, it was Amgen, coming with new data, going to dislodge the incumbents, which are, of course, Novo Nordisk and Eli Lilly. And of course, you know, these are folks who've been on the market with drugs for first diabetes and then obesity for several years, over a decade, with safety data, with physician understanding. Everything is in place with several indications for their products as they're going along, and success in various areas of disease that are related to obesity. So the market still likes to worry about this new data coming from company X, company Y, and then of course the data comes, and it's hard to go beyond the 20–25% weight loss, which is also Novo Nordisk has got some data coming before the year end for a new drug themselves. So when the data comes out and it looks okay, but it's no magic, and side effect profiles look questionable, there's data points that are not being dissected correctly, and that's what happens. Stock sells off, and the others, and people remember, Lilly and Novo lead this market.
Yeah, you're absolutely right. And you have a ton of also-rans trying to catch up to that lead that those two companies have. I want to go back to the politics of it all, though, because we're talking about Medicare and Medicaid potential coverage. Let's talk about potential government price negotiations under the Inflation Reduction Act, because semaglutide, of course, was expected to fall under that. And our reporting has shown that the proposed rules for Medicare and Medicaid would go into effect at the same time that the program to lower medication costs through price negotiations would happen. So there's a lot of different cross currents coming together here. What does this ultimately mean, Sam, when it comes to access, when it comes to price?
Yeah, I mean, look, these obesity drugs have got good safety profile. Tolerability profile is a slightly different question, but safety, meaningful safety is there. They significantly reduce weight, and they really help people manage quite a lot of the side effects, if you want to call them that, of obesity. At the end of the day, the easier it is for people to access these drugs, the better for society as a whole, and the better for our eventual savings of costs associated with the diseases that result from it in 5, 10, 15 years' time. So whether it be Medicare coverage, whether it be reduction in price due to IRA coverage, at the end of the day, we do have an epidemic of obesity, and we need to deal with it. And therefore, the assumption is if prices go down, demand will go up, and therefore the companies should still be able to succeed with their revenues, and also to continue to invest in the space to get better drugs.
Sam, we thank you so very much for your time today. Of course, that's Sam Fazeli of Bloomberg Intelligence, breaking down a very, very busy day in the world of healthcare, from Washington, of course, to the C-suite. We want to also bring you some breaking news here. The president of Mexico is speaking at a daily news conference hosted on YouTube from the National Palace in Mexico City. Some of the headlines coming out of that event is that she is seeking to meet as soon as possible in the wake of those headlines just a day ago from the president-elect about those tariffs that may be imposed on Mexico. She says she is of the view that they will reach an agreement with the United States. Tariffs will follow other tariffs, she said, hurt other companies, and that U.S. and Mexico must cooperate to resolve these joint challenges including migration, fentanyl, and she is going to be sending a letter to the president-elect on migration and fentanyl. Katie, I know this comes just a day also after we know that Canada's Justin Trudeau had a call pretty immediately with the president-elect.
So we got the Mexican response, of course, from Mexico's president. We know that Trudeau and Trump held a phone call. Reporting suggests that it was, quote, productive when it comes on trade. But even still, I mean, you take a look at how the stock market is taking this. GM shares extending their decline down almost 8%, the most since June 2022. So we'll see. The leaders are talking, but stocks are reacting nonetheless.
Right. We were talking about it, maybe not a broad-based response in stocks, but certain stocks certainly feeling that pain. Now, coming up next, we're going to talk about the world of finance, a novel way to find the next whiz kids on Wall Street. We're going to bring you the details in our Wall Street Beat next. This is Bloomberg.
Your Fixed Income Fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Time now for the Wall Street Beat. We're looking into World Quant's competition to find the next generation of finance geniuses. It's the subject of today's Big Take. Bloomberg's Justina Lee co-wrote the story, joins us now. We love covering quants here on this program because it does say something about the differences in opinion of the skills you need for the future. What are the skills that you're seeing? Of course, World Quant is backed by Izzy Englander's Millennium. They have been known to really mint math geniuses over many, many years.
Yeah, I think what's kind of really interesting about what they're trying to do here is that essentially they kind of want kind of kids and, you know, like anyone all around the world to try to actually do what quants do, which is to crunch data in search of trading signals. So they've built this crowdsourcing platform here where anyone can kind of play around with the data that they have in order to find those signals. And if you do well enough, you might even get paid. And so it's quite an interesting new model that we're not really seeing in a lot of places to crowdsource alpha at a time when, you know, hiring actual Wall Street talent is costing, you know, a lot of firms so much money.
What does it say about the future of talent, Justina? Because the signals tomorrow will be different than the signals of yesterday. I mean, can people of this kind of generation of quant be as successful 10, 20 years from now when the math is just faster?
Yeah, that really is sort of the big question here. And I think sort of what World Quant is sort of betting on is, at the end of the day, you know, they always say, you know, talent is global, but opportunity is not. But these days, there is a lot of machine learning and statistical talent that's kind of all around the world. And I think in their vision of quant finance, you know, you don't actually need to know that much about the stock market, or you don't actually need to read Bloomberg, for instance, because at the end of the day, it's all about crunching the data. Right. But they do clean up the data in advance for you, and then they're just counting on you to kind of work your statistical magic on those numbers.
All right, Justina Lee, out with yet another big take. Someone's stopper. Great reporting as always. You can find that on the Bloomberg terminal or on Bloomberg.com. Coming up in the next hour, we'll talk to Neil Dutta. We're going to speak to the CEO of Lloyd's America. And then we're going to talk to Brandon Yarkin of Universa Investments. Don't go anywhere. This is Bloomberg.
The leader in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
If you're
minutes ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay. Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure. Yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English Italian.
Let's try to do English Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Customs and Border Protection seized 3,000 phony Gibson guitars last week, the ones favored by music greats like Les Paul and Jeff Beck. Value of that haul, an estimated $18 million. This is CBS News. A man behind a hotel empire in Orlando, Florida, who gave away lots of his profits, has died.
Harris Rosen's 7 hotels and resorts made him a millionaire hundreds of times over.
Must confess that things are going really quite well.
He gave back tens of millions of dollars to his adopted hometown. He donated seed money to start a college of hospitality at the University of Central Florida. For decades, he provided scholarship money for disadvantaged students and paid for preschools. Harris Rosen once said there's as much intellectual talent in underserved communities as there is in gated communities, and the investment pays off. Harris Rosen was 85. Peter King, CBS News, Orlando.
The newly crowned Miss Universe stirring up controversy. She posted a TikTok video from the top of the Empire State Building that includes her lip-syncing the N-word in Jay-Z's Empire State of Mind. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so check out youtube.com, search Bloomberg Podcast. Alex Steele, Paul Sweeney, the Bloomberg Intelligence Programming. We got some economic data coming out from the Consumer Conference Board. Kind of came in line with expectations, better than last month. We'll break that down coming up in just a moment. We're also going to check in with Brendan Murray, Bloomberg Global Trade Editor, to get the latest reporting on the announcement last night from President-elect Trump about some pretty significant tariffs potentially on Mexico, Canada, China, some big trade partners, so we'll break that down. Anna Rathbun, she's the CIO at CBiz Investment Advisory Services, get her market call going forward. And then Dana Wollman, Bloomberg Senior Technology Editor. It looks like Intel finally did get that contract from the U.S. government for chips. I think the number is about $7.9 billion, so we'll get the latest there for Intel. But right now, let's kick things off. Lisa Mateo and a Bloomberg Business Flash. Lisa.
And this Bloomberg Business Flash brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. All right, speaking of which, we have more economic data out this morning. U.S. home price growth, well, that slowed in September. Buyers are just getting more negotiating power in the housing market. That's according to S&P CoreLogic Case-Shiller. Now we go to new home sales for October. Month over month, the survey was for a drop of 1.8%, came in as a drop of 17.3%. So big difference there. The prior was a revised raise of 7%. And then you go to the Conference Board's read on consumer confidence for November. The survey was for 111.8, came in just a tick lower at 111.7, but that's still higher than the revised up 109.6. All right, to the markets we go. Stocks, we have it mixed right now. Traders trying to look past President-elect Trump's plan to impose additional tariffs on the nation's top trading partners. So you have the NASDAQ up 0.5%, 96 points, 19,148. The Dow down 0.6%, 272 points. And we have the S&P 500 up 0.1% or 10 points. We have the 2-year yield, 4.27%. That's little change. The yield on the 10-year, 4.31%, and that's up 3 basis points. The Bloomberg Dollar Spot Index up about 0.1%. We have the Japanese yen, euro stronger, British pound weaker, and we have Bitcoin down about 0.2% at around 93,000. A ton of retail earnings today. We have shares of Kohl's taking a hit, down 22%. Weakness in apparel, footwear business. That really pushed us to trim that full-year sales outlook. You have Best Buy down about 7%. They say demand slowed for electronics, other appliances, and finally Dick's Sporting Goods. Okay, so they had some better news. Their shares up about 0.3%, but they said there was a strong demand for sports gear, so they raised its full-year sales outlook. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. We did hit another intraday record high today in the S&P. Just keeping track despite the headlines. Also, consumer discretionary in the S&P also at a record high despite the weaker retail earnings. Really interesting price action. I want to get back to that U.S. consumer confidence data rising to the highest in more than a year. Also taking a look at expectations for the next 6 months. That's near a 3-year high as well. Dana Peterson, chief economist at the Conference Board, joins us now. This is her data. What is leading the optimism here?
Sure, it's all about jobs. Consumers are much more excited about it's all about jobs. Consumers are much more excited about both the current situation in terms of finding jobs and the future. That really led the index going forward.
How much was this done after or before the election?
Well, it actually it overlapped the election.
Okay.
We started in early November and it ended November 18th. So we did really capture quite a bit of a period of time to see how consumers were feeling right after the results.
So is it better, is it jobs because they feel better about keeping them, getting higher pay, or getting a different job, or what?
Well, it's interesting. We did ask consumers what they were concerned about for next year and what they were excited about for next year. And certainly next year, they're expecting that they're going to see lower taxes, also lower inflation, and potentially higher income. So I think that may be tied to the jobs picture.
So, Dana, what's the big... I mean, you think about, it looks like the Fed is really focusing on labor here as opposed to inflation. When you do your surveys, what do you think consumers focus on the most?
Well, when we ask consumers what they're thinking about in their write-ins, they usually say prices. And indeed, prices and inflation continue to be at the top of the list of things they believe would affect the economy. But, you know, unsurprisingly, election or anything political also rose to the top of the list.